proof of life. I see a message there from Mr. Andres. I hope that you've looked at that as a story so that we can start. All right, let us welcome the AG team this morning, who are briefing us on the state of affairs of the SOEs. And then we will be in their hands. What we'll do, colleagues, we'll take one presentation at a time, and then we dispense with it with questions, and then move on to the next one. The AG team will structure themselves as they deem fit, and they will allocate themselves as they deem fit. So let us welcome the AG team, and good morning to all of you, colleagues. Team AGSA, once again, thank you very much for briefing us this morning, and thank you for your understanding with the changes.
Recording in progress.
So far as the construct of the meeting is concerned. So let us hand over to you, Team AG, and then we will take one presentation at a time. When you're done with it, with questions, and then the next one, for members. But as I said, we are wholly and completely in your hands. Good morning, everyone. Welcome, and Team to you.
Thank you, Honorable Chairperson. Good morning, Honorable Chairperson. Good morning, Honorable members and other colleagues. My name is Andries Sekheto. I'm the business unit leader responsible for the business unit within the office of the AG that takes care of, amongst others, the comms portfolio. I'm accompanied by some of my colleagues, Honorable Chair, Honorable members. So with your permission and indulgence, quickly, Honorable Chair, I will ask that the colleagues introduce themselves so we know who we are dealing with. I will then start with my team that is supporting me in terms of the comms portfolio. First, I'd like to introduce Ms. Tabero Musisinyani, who's the Deputy Business Unit Leader for National D. Tabero, do you mind switching on your camera so the members can see you? I also take it that it's your first time attending SCOPA, because the portfolio that you were heading previously did not have any run-ins with SCOPA, so it would be good if the members could also see your face. Tabero?
My video is on.
Okay, thank you. Then from the comms portfolio further to that, we've got Ms. Joyce Nkonyana, who's also supporting us in terms of the post office and the Postbank audits. Joyce is the lady with the pretty glasses. And then I also have Ms. Suret Talyar, who is supporting us in terms of the SABC audit. Suret?
Good morning, Honorable Chair, Honorable members. Andres, I don't know, I see I have a technology glitch. My video is on, but I'm not showing on the screen. I'll just try and see if I can sort it out. Apologies.
No, that's fine, Suret. So hopefully you would have had it sorted out by the time we do the presentations so that the members can see your face as we present. Thank you. Honorable Chair, Honorable members, that is the team of the unit that takes care of, amongst others, the comms portfolio. Accompanying us as well in support of today's briefings, we also have our colleagues from the two other business units who are taking care of the other portfolios, who've also been requested to come and present to the committee. I'm going to hand over to Madi, who is the business unit leader for one of the portfolios, who will then also introduce the team that is supporting her. And then once she's done, she will then hand over to Ms. Nompagamo, who will then also introduce the team that is supporting her in terms of that unit. Thank you, Madi, over to you.
Thank you so much, Andres, and morning to honorable members and morning to honorable chair. As indicated, my name is Madidi Malusingo. I oversee the business unit that looks at and a lot of the state-owned entities. Together with me today is Mudiye Skosana. Mudiye, maybe as I introduce the team, you can also just switch on your cameras. Mudiye is also going to be leading us in the presentation today. I've also got Umulani Raponda, who is also a deputy business unit leader within the business unit. I've got the senior managers that have worked on the Transnet audit. I've got Karabo, if you can switch on your camera. I've got Joe, if you can switch on your camera as well. I have, I'm trying to see all my team here. I've got Joe. Joe, if you can switch on your camera. I'm not seeing it. I'm hoping your camera is on. I've got Denvin. Denvin, if you can also switch on your camera. Joe, I'm seeing you now. And then we also have Narisha. Narisha, if you could also just switch on your camera. So Chair, this is the team that's going to be supporting me in terms of the presentation on Transnet today. I will then hand over to Nompakamo to introduce the team that will be presenting on Prasa. Thank you.
Thank you so much,
Madam. Before Kubege, I think we don't need to have cameras on because I'm worried about bandwidth and glitches, as long as we hear substantively what has to be said.
All right, thank you so much, Honorable Chair. So today I am the audit, I'm a business unit leader responsible for the audit of the transport portfolio, which includes Prasa. So with me today, I've got Mukwena Nicholas, who's the acting deputy business unit leader for Prasa, as well as Ilza Slaba, the senior manager responsible for the audit of Prasa. Ilza will be the one who's going to be taking us through on the detailed presentation today for the Prasa. Thank you, Honorable Chair, and we'll hand over back now to Andres. Thank you.
Thank you, colleagues. So there you have it, Honorable Chair, Honorable Members. Quite a big delegation for today. Reason being, Honorable Chair, Honorable Members, that it is quite a substantive request in terms of the number of institutions that we must brief the committee on. So, Honorable Chair, before we also get started in terms of the actual briefings, I would also maybe appreciate some guidance in terms of the briefings, because of the gravitas and the weightiness of the portfolios which the committee has requested to be briefed on. We wanted some guidance in terms of the timelines, because we see we have been allocated just under 2.5 hours to do the presentations and engagements. So the first piece of guidance we've noted in the sense that we will do the presentation and then we will take questions and comments immediately after that particular institution, which already assists us a lot in terms of the way forward, but just in terms of the actual briefing notes and the presentations themselves. So we thought maybe about 20 minutes to 30 minutes should do per presentation, depending obviously on the size. Some might go quicker, some might take a bit longer. So to that effect, Honorable Chair, it might be prudent that we just focus on the salient issues and maybe just focus on some of the key matters within and highlight some of the key matters in the portfolio. I think that would be best suited in terms of the time that's been allocated, but also to make sure that we also do justice in terms of the individual respective briefings. I don't know if that would be acceptable to Honorable Chair, Honorable Members.
Let me be reaching and see the House starts at 3 today. But I think also proceed on the assumption that we read the document which was sent prior. So cover the salient points. If an issue happens to be missed because members receive it prior, they will go back to it. So I think just proceed as you deem fit, and then the interactive session will fill in the missing gaps when necessary.
Perfect. No, absolutely perfect. Thank you for that, Chair. So I think that's quite clear. So to the respective presenters, that was quite clear. Honorable Chair, honorable members, we will therefore now commence the presentation and the briefings. First off, we will start with the SABC, the presentation on the briefing on the SABC. Insofar as it relates to the SABC, Honorable Chair, whilst our colleague is still flighting the actual briefing note, you would have noted that the outcomes for the SABC unfortunately did not improve from the previous financial year. The SABC remained qualified on the issue of the opening balances of the irregular expenditure. We were hopeful last year, Honorable Chairperson, Honorable Members, when we met with SCOPA during the previous rounds, that the institution would be in a position where they would have completed the exercise to determine the full extent of the opening balances of irregular expenditure. Honorable Chair, unfortunately, that was not done. The institution is about 90% complete in terms of this process. They had committed that they would be able to put us in a position where we can start evaluating all their efforts sometime in November and January as we commence the next cycle in terms of our planning. So we look forward to that. However, as it stands in the current financial year, the institution remained qualified. Honorable Chair, honorable members, what that also then means for the institution is that unfortunately the institution then is not also able to be in a position where it can finalize its consequence management processes as required by the PFMA when you have incurred irregular, fruitless and wasteful expenditure. So that it's fine, you can just pause here in terms of the screen before I hand it back over to you. So honorable Chair, honorable members, as I was saying, they are also now in the unfortunate position where they cannot finalize their consequence management processes as a result of this outstanding irregular expenditure process. So the PFMA, as you would recall, honorable Chair, honorable members, requires where you've incurred irregular, fruitless and wasteful expenditure, that the accounting authority or the accounting officer then go and duly institute in an investigation and do a determination to determine the root causes so that we can then remedy the situation, implement improvements to the systems of internal control where they have failed so that we can prevent incurring fruitless and wasteful or irregular expenditure going forward. And then also ultimately hold people who then may have transgressed insofar as relates to the non-compliance to account. And whilst that process is ongoing, it means that the consequence management process is also not fully being effectively implemented. So that's the main issue. The other main issue that the team will also highlight to honorable Chair, honorable members, is last year when we also briefed the committee, we were very explicit or tried to sort of highlight to the committee that we were going to focus on the extent to which the institution was able to successfully implement its initiatives in terms of its turnaround plan. Honorable Chair, honorable members would recall a number of years ago, the institution faced financial difficulties and financial constraints, and they then came to Parliament, requested additional funding in order to assist them get out of their dire situation. They were provided with a bailout to the tune of just, I think it's about 3.2 or 3.5 billion at that particular point in time. It was, if I'm not mistaken, about the 2018 to 2019 financial year. And they were provided those funds on the basis of them having made certain commitments to Parliament in terms of how they were going to then turn around the situation through the implementation of a turnaround plan. So as the time has then progressed, we then also deemed it fit to do a proper in-depth reflection in terms of some of the initiatives on the turnaround plan. And then also want some of those indicators and the numbers are showing us at this point in time, because we'd rather like to proactively inform those charged with governance and oversight committees such as yourself, in case there are any potential red flags, so that we don't start having tough engagements only when the popo has hit the fan. Honorable Chair, honorable members would recall, as you would also see when we brief you on the post office, as soon as any institution of government starts going into the realm or the avenues of going concern, because the matter is so material and also so pervasive, because it speaks to all aspects of business. As the Office of the AG, ordinarily that is followed by a disclaimer of audit opinion, because we would not be in a position based on the numbers and highly unfavorable numbers, the materiality and the pervasiveness, to express a view or to confirm or dispel whether that particular institution would be able to operate for the foreseeable future, because we just would not know, but the numbers would be really indicating significant unfavorable indicators. So it's on that strength or on that basis that we also then unpack the numbers and the figures at the SABC. Unfortunately, the institution has also remained unprofitable over the past couple of financial years. So they've consistently been incurring losses, meaning that whatever they need operationally from a cost point of view to run the business far exceeds what they're able to generate from a revenue point of view, and therefore they're not able to turn a profit, and they've been incurring significant losses over a number of years. There are some funds remaining in terms of the bailout funds that were allocated to the SABC. However, those are also, from our assessments, should potentially even not make it past the next financial year that will follow this financial year. And hence, the need for us to also then emphasize the discussion around the financial sustainability and the going concern of the institution. Honorable Chair, honorable members, I'm going to hand it over to Firet, who will then do the rest of the presentation and focus on those salient issues, especially insofar as it relates to the irregular expenditure, as well as the consequence management, and give us a bit more context with regard to how far management are in terms of the process that they've implemented to deal with this opening balance of irregular expenditure. Thank you, Honorable Chair. Firet, over to you.
Thank you, Andries. So I will quickly take the Honourable Chair and Honourable Members then through the briefing document. Andries already touched on some of the key matters that we've included also in the high-level summary. So I will move a little bit down on the page. So with the turnaround strategy, we will also go into a little bit detail later. And then as Andries also alluded to, is that if you look at the graph on page 4, management's expectation currently for the current year that they are in is that the revenue is still less than the expenditure going to be incurred, and thus it's also still resulting in a continued loss. Management also made some material corrections to the financial statements due to some lack of adequate review, and then management has also incurred still irregular expenditure, mainly due to the process that is still unfolding for them to ensure that irregular expenditure is complete. And then as Andries was indicating, then also consequence management is still a concern within SABC. They also had 2 material findings reported on the annual performance report, mainly due to poor planning, because those 2 indicators have been reported as not applicable in the annual performance report due to systems and measures that was not available at that stage. Overall, the achievement of SABC, 22 targets out of the 46, so they have achieved a 40% achievement rate. And the main reason for that is due to delays in encountering supply chain processes, which has subsequently resulted in the revision of implementation timelines associated with a significant number of indicators. Then also included in our audit report with our act, where we identified material irregularities. SABC in the prior years had a material irregularity identified on the security contract, where they did not follow proper procurement processes. That matter is still currently awaiting the court judgment, and we will then also from an AGSA point of view follow that up in the next audit cycle. Then we have identified a new material irregularity where SABC has paid unoccupied office space within a building that they've paid for. That resulted in fruitless and wasteful expenditure. And then that material irregularity was then identified this year. The accounting authority is currently appropriately dealing with that matter, as there's also court proceedings being conducted, and we will also then follow up on that matter going forward. The next page, we have just included a nice graph or a picture of the communication portfolio, where we've just indicated that the department DCDT is overall responsible, and where SABC is then also forming part of the big project that is currently running and overseen by the department with regards to the BDM project, where they need to switch off from analog to digital, and where their transmitters need to be switched off. But I'll also go into some detail into that later on. I'm going to skip the organizational structure, which was just an extract from SABC. Then, based on the vacancy rate, due to the Section 189 process that was conducted within SABC last year, SABC is currently running at a 70% vacancy rate, where there's 486 permanent positions vacant as at 31 March 2022. And then the graph that we've included there is just to provide an overview of where those specific vacancies in the organization is then included in. If I then move to the history of the audit opinion of SABC, in 2017-18, SABC did have a disclaimer. So that from that year, they did improve with less qualification areas included in the audit report. For the past 4 years, they have remained on a qualification. And the last few years, the matter that is still not fully addressed by management was then the completeness of irregular expenditure. We also then still from 2018-19 still emphasized the uncertainty relating to the going concern. And then there was some other emphasis of matters as well included. The report on predetermined objectives, as indicated, they still had material findings for the last 2 years, and then they still remain with compliance findings specific to adjustments to the financial statements. There was an improvement the last 2 years with procurement and contract management, where we did not include any material non-compliance in the audit reports, but they still do incur irregular and fruitless or wasteful expenditure, and then consequence management is still imminent within the audit report. If we go to page 8, this is then just a high-level overview then of the irregular expenditure, where management, like we've indicated, did start a process on reviewing the completeness of irregular. They started on from April 2018 to March 2022. At the date when the audit report was signed, they were still busy with that process. And we have qualified the completeness of irregular expenditure from 2012-13. So technically speaking, they actually need to ensure that from the year 2012-13, that all irregular expenditure is then included in the irregular expenditure register from that financial year. So during the audit, they did not provide us with any reports or registers prior to April 2018. However, as Andries was also indicating, we have already engaged management where we had a meeting with them to understand what process that they conduct on. And they have committed to provide us actually today with the procedures so that we from the AG side can understand what they did. And if we are comfortable that it will address the completeness of irregular expenditure, and then if we are comfortable with that process, we will then in this interim audit, we will then start auditing the irregular expenditure to confirm that all irregular expenditure has then been included in the next financial statements. Emphasis of matter, the main concern is then obviously the going concern, where management has incurred a net loss of 201 million compared to the prior year of 530 million. This is mainly due to the declining in revenue and the high cost base, as well as declining in audience share, which I will also allude to a little bit later, mainly due to various reasons. So for us is that SABC really needs to focus on making sure that their content is digitalized, their content acquisition is tailored for the wider demographic audience, and then the effective distribution then also of the set-top boxes to ensure that all South Africans have access to SABC 1, 2, and 3. On the order of compliance matters, like I've indicated, there was still material misstatements identified on the financials that had to be corrected due to a lack of adequate review. And we have recommended to management that they need to provide appropriate audit plans to address that going forward. They have also then still incurred the irregular expenditure, mainly due to this process that they are busy with. And then there was also some fruitless and wasteful that was still coming through, relating to interest and impairment of the content. And then consequence management, where we have seen that not all disciplinary steps were taken against some officials who had incurred irregular expenditure. Audit of predetermined objectives. Those two objectives regarding new programs broadcasted within the year and the share of dairy quarter hours listened could not be reported on. They reported it as a not applicable, and this was mainly due to the non-availability of the system and new measures that was not being comparable, resulting in SABC then not reporting on these two indicators. So our recommendation is that management need to ensure that when they plan, they need to make sure that those systems and measures are actually in place so that for the year to come, they can then report appropriately on those specific indicators. Specific then on irregular expenditure, like I've indicated, this is the main concern with SABC, and they are busy looking at those where we have qualified the opening balances. Included also in the financial statements, if I can focus on paragraph 5, is where they have disclosed that with this process, they are currently sitting then with potential irregular expenditure of 1.5 billion that will need to move up into the irregular expenditure note. And this will then obviously trigger then again the consequence management process that needs to run with that irregular expenditure identified. Due to the various reasons for them taking so long with this process, where the National Treasury Framework is actually indicating that they need to conduct this process within 3 months, which was not done. So we have alluded and raised that finding also to management, indicating that. So the irregular expenditure then compared to the previous year slightly from 111 million to 134 million. Out of that 91 million that is incurred in the current year, it consists both of irregular expenditure that could be part of a contract, a multi-year contract that was identified in previous years as irregular expenditure. And then that expenditure still then incurs in the current year. But there was also new irregular expenditure identified by management that was included in irregular expenditure. So during the audit of irregular expenditure, we did identify some key internal control deficiencies during the audit, where they did not enforce compliance with supply chain prescripts. They did not implement adequate measures to ensure that their contract management is actually effective. And internal audit, with their audits that they are doing at SABC, they also identified some internal control deficiencies that management needs to address within the supply chain unit. And then obviously the overall effect then is that they cannot have adequate and timely disciplinary steps with consequence management. So included then in the financial statements also is a balance of 2.9 billion of irregular expenditure that is still waiting condemnation, subject to then further investigations. Fruitless and wasteful, majority is just the interest on late payments of 3.3 million, the rental of the unoccupied office space of 1.5, and then the impairment of content amounting to 5.5 million. 3.7 is then the material irregularities that I've already alluded to. So that is the one on the rental. That contract expired on the 31st of October 2021. Management has gone through a process where they have gone through a tender process, and there's a new contract in place, excluding then the unoccupied office space. So at least that fruitless and wasteful is not continuing. But then there is the process for addressing the material irregularities pertaining to see if they can actually then recover the money. And that is where the legal proceedings is still taking place. And we will then follow up on that matter now in the new audit. And then the security tender that is from 2017, where they made the award, that is still then ongoing. The matter was heard in May last year, and then the judgment was reserved on this matter. So we are awaiting to see what will the judgment be and what type of actions SABC will need to take, where we will then follow that up as well. The turnaround strategy, as indicated, the bailout of 3.2 billion was provided to SABC in October 2019, mainly to assist with the financial sustainability. And then the turnaround strategy was then underpinned and then supported that bailout. We've included a bailout report that was on the 31st of March, just to indicate how that money was spent, and it was earmarked for specific purposes. So by the end of March, there was about 917 million left of the bailout funds. During our evaluation of that, we did identify that management plans to spend the remaining balance of the 469 million is included in the current budget, and that the remaining balance of the 440 million of acquisition of content is also allocated in the budget for 22-23 to ensure that there's increase in local content. And management is also in the process of obtaining National Treasury approval for deviating on that procurement process specifically. And then we have also just alluded to the internal audit report, where they did indicate to SABC that the recommissioning of programs poses a risk of a minimal return in investments. So the following, what do we call it, graphs, is just as an example. We, for example, included Northwest and Mpumalanga. This is just indicating the audience share that keeps declining over the months with various reasons. This will include then obviously the BDM project that DCDT is currently busy with, moving then from analog to digital as well. But as can be seen is SABC 1, 2, and 3, sorry, it's very small, but if you look at the green, the yellow, and the blue lines, they keep, the decline keeps on continuing with audience share. And the challenge or the concern with this is audience share, the advertising revenue within SABC is very linked to the audience share that they have. Okay. So then if we look at management's cash reserves and the forecast, it is currently indicating that there's a decrease from 1.1 billion to 775 million by the end of March next year. Their own cash flow will be at 421 million, and their bailout will then be at 353 million. The following paragraphs is just where we've indicated over the years from when they received the bailout funds, how did we evaluate that, and how was the going concern, the uncertainty they're looking. So in 1920, they operating at a loss of 511 million, but the assumption was supported by a healthy capital position, and the total cash on hand at that stage was 2.1 billion. And then for 2021, they also had a net loss of 530 million, but the assumption, the going concern assumption, was then again supported by ongoing engagements with the signal distribution Centec to manage the signal distribution cost, and there was revenue expectations on commercial revenue, etc., and within growth. However, SABC did not realize the budgeted figures that was planned, with an overall shortfall of 1.9 billion due to declining revenue. So overall, what we are saying with the turnaround strategy is, if we look at it, the input achievements have been sufficient. However, if we look at the risk that the output after the 30 months of the 36 months did not yield the anticipated tangible results, in improving the financial sustainability of the SABC. So we have urged management to understand the drivers and the root causes, either internal or external, and to redirect their efforts on initiatives driving output and impact. Analog switch off, like I was saying with this, is the BDM, the set-top boxes that needs to be installed. This is currently done by Centec and Yusuf and USASA and overseen by the department. The department did not achieve the targets for the set-top box installations, and therefore the transmitters for SABC was they not switched off as was the target at 100%. But in that we did not identify any material audit findings. However, like we are saying, SABC's ability to pursue its mandate is largely dependent on its urban relevance, which could be affected by the distribution of the set-top boxes, digitization of content, and content acquisition tailored for a wider demographic audience. Status of internal controls, leadership. If I can quickly go down, so governance is green. We didn't have any concerns relating to the risk management audit committee or internal audit. Leadership is also moving into providing effective controls. So the main concern is mainly on the financial and performance management, where we have proper record keeping that still needs to be conducted. And then also regarding compliance, ensuring that they do comply with all matters that needs to be complied with. And then assurance providers, where we do indicate that there's only some assurance providers, which is obviously then on the level of senior management and on the accounting officer. So our recommendations then to SABC was obviously to finalize the process of the irregular expenditure, which will effectively then also impact the consequence management, that they need to be more focused, deliberate, and assign the necessary swiftness, and they need to ensure that there's a regular and adequately review controls over financial and performance management. And then lastly, the turnaround strategy and the plans to improve their financial sustainability. The recommendations to the committee is then just obviously to follow up with management on the finalization of these action plans and the qualification of irregular, needs to request reports and the feedback on the effective implementation of the turnaround plan and the liquidity position of the public entity, so that the initiatives is clear and how they will drive this financial sustainability of the entity, and then inquire from the accounting authority which measures have been implemented to ensure and improve the preventative controls then on procurement and contract management, and ensuring that they're proactive in their performance information, and lastly to continue on the consequence management pertaining specifically to the ongoing investigations on irregular and fruitless and wasteful expenditure. Thank you, Chair.
Thank you, Suret. Honourable Chairperson, we will now hand back to Honourable Chair and the members if there are any questions insofar as it relates to the presentation for the SABC. So in a nutshell, Honourable Chair, Honourable members, still grappling with the opening balances with regard to irregular expenditure, some concerns which have been highlighted and elevated with regard to the going concern principle and unfavourable financial position at the institution, and then some improvement that could still be made in terms of the consequence management processes. Honourable Chair, Honourable members, I will hand it back over to you. Thanks, Honourable Chair.
Thank you, Rich. Thank you very much, Team AG, for that. And it rains and pours. Right, colleagues, questions on SABC? Going once. All right, Honorable Hatebe.
No, thank you, Chair. I think the last section of the presentation really gave us a great deal of areas that we need to focus on when dealing with the SABC. The recommendations are very key and progressive. Just one question for me, Chair. as it relates to what is termed as material uncertainty relating to the going concern of the entity. And the graph that was shown, that of the revenue will be less than the expenditure, resulting in continued losses, Chair. While I understand the mandate of SABC and it being a public broadcaster with a specific a mandate, Chair, however, the picture as reflected by the what we call management revenue projection, does it, and here, Chair, I'm not trying to blow things out of proportion. Does this picture indicates that SABC is trading recklessly? And what does it mean in terms of sustainability of the public broadcaster? I'm just trying to get clarity because you kept on raising this issue of a going concern. I'm not sure when we talk about the liabilities versus the assets, which will determine whether or not the entity is trading recklessly. But you kept on raising this issue of concern. Just give us your sense so that we are pointed in the right direction when posing question to the public broadcaster. I think, well, the issues of irregular expenditures and the root cause, the recommendation as projected to us on the last page, I think those will assist a great deal moving forward. Thank you, Chairperson.
Okay, any other question for the SAPC? All right, let's get responses to that. And then, yeah, right. Did I say that right? Yes, let's get responses to that. Sure.
Thank you, Honorable Chair. No, indeed, you did say it right, Honorable Chair. So thank you for the question from the Honorable Member, Honorable Chair. So the issue essentially around the going concern, Honorable Chair, is twofold. So the more direct question that was raised by the Honorable Member through you, Honorable Chairperson, with regard to reckless trading, there are a number of tests that the institution must meet in order for us to say that it's trading recklessly. But the Honorable Member was also quite correct and appreciative, of which we also appreciate, of the fact that what makes it difficult in the SOE space is they have been given a certain mandate and that they fulfill a particular role as well. So it becomes a little bit more increasing to just explicitly and expressly so they are rating to say that they are trading recklessly. In this instance, I think the colleague was trying to put some light on the fact that even though they are incurring losses, but she did try to highlight that they still have sufficient assets and sufficient cash on hand to at least meet some of the short-term to medium-term liabilities in the institution as and when they fall due in the ordinary course of business. So at least in the foreseeable future, they have sufficient cash. So for now, we are comfortable that there's no need for us to elevate and modify and report something on the audit report with regard to the going concern assumption as yet. So the reason for the information, the inclusion of the extent and the detail of the information is exactly what has happened here, Honorable Chairperson. It's for the Honorable Chairperson, Honorable members, for you to be triggered and spur the conversations on with management in a proactive manner to say the indicators are already unfavorable at this point in time. And whilst you may have sufficient cash to at least take you to the next cycle, what is happening thereafter from a sustainability point of view? What are the measures and the initiatives you are implementing to then make sure that the situation at the institution is being turned around? So I hope that answers that insofar as that relates. And hence, on an annual basis, we have a number of indicators which we look at. So in this suite of indicators, a number of them will be positive, a number of them will be maybe negative. So because we've got a number of them that are negative, such as the continued operational losses that the institution continues to suffer, we then elevate as an emphasis of matter the fact that they are in this precarious position, which may eventually then become quite a significant matter going forward, and hence the emphasis of matter. So we don't modify them, we haven't modified them, but we are saying if we look at the suite of the indicators, there are a number of them that are unfavorable, and they could indicate potential problems going forward, and hence we bring it to the attention of those charged with governance, as well as the oversight committees such as COPA and the portfolio committees, to exactly spur on such conversation and trigger such conversations with management to ensure we don't just engage on the issue when the horse has bolted and it's already too late. Thanks, Honorable Chair.
Okay. Honorable Hateba, are you good with that?
No, thanks, Chair. I'm good. As long as there's an appreciation of the nature of the animal we're dealing with, and the expectation, therefore, should be as such in terms of the mandate. But equally, I understand that at least they ought to break even in terms of their management revenue projection. Of course, we're not expecting them to derive profit as a public broadcaster. So I just wanted to test that a sense of appreciation of what is it that we're dealing with. But the response, Chair, I think suffices. Thank you.
Okay, thank you very much. Team AG, let's go to the next one.
Thank you, Honorable Chair, Honorable Members. So it will still be us. So Honorable Chair, Honorable Members, we will then proceed to the next presentation. We will now head over to Joyce, our colleague Joyce Nkonyana, who will assist us on the presentation. I think, Honorable Chair, Honorable Members, with your permission and indulgence, because we are familiar with this institution, it has served before the committee before, I would then recommend that we are going to deal with the post office first before we take the Postbank, because the Postbank is a new presentation in terms of the public domain based on the recently tabled annual reports, and then we can therefore start off the presentation with the post office. Joyce, over to you. Thank you, Honorable Chair.
Thank you, and morning again, Chairperson. I'm just quickly trying to project the presentation. If you don't mind, you can just allow me just a few seconds. Okay. Okay. Right. Thanks again, Chairperson, for allowing me that few seconds for me to find my presentation. So I'm going to take you through the outcome, the audit outcome, based on how we have experienced the post office as we're going through the audit. So before we even go through the detailed presentation, I'd just like to give you just a high-level overview of the group's performance in terms of the audit work that we've done. So the post office is made out of the group, the holding company, and then it has subsidiaries. The subsidiaries are 7 in total. So we have 5 property companies and 2 other subsidiaries, which is the document exchange companies and Courier Freight Group. So the Courier Freight Group is a dormant entity. It hasn't been trading for a while. So the audit opinion that we have identified was we did the audit there was an adverse. The adverse was mostly influenced by the fact that we did not agree with the accounting basis that has been used. So they've indicated that it's a going concern. However, from our assessment, we do not agree that it's a going concern. And then the property companies got a disclaimer of audit opinion.
This is mostly driven by the fact that they are heavily reliant on the holding company in terms of financial support. However, because the entity is also, the holding company is also struggling financially, so as a result, we could not conclude that indeed those entities are also a going concern and they can sustain themselves without the holding company. And then the last subsidiary, which is the document exchange company. So it's one of the performing subsidiaries in the group. It's even doing better than the holding company. However, it still got qualification, but I think the few areas that we've identified could be areas that can be cleared. So just going straight to the group, the holding company, it got a disclaimer of audit opinion. So I'm just gonna go straight to this table just to illustrate how for the past 5 years they've been performing. So you can see in 2017-18, they were sitting with an unqualified audit opinion. In 2019, this is where the SASSA contract was taken over by them. So the very first year of taking over the contract, we've identified that the processes, the internal control processes, are not sufficiently they have not been sufficiently implemented, and as a result, we were identifying that we are unable to substantiate, or rather we can confirm the figures that have been reported as the grant money that has been disclosed at the end of the financial year. So in 2020, what happened is that this is when the split between the Postbank and the Post Office took place, and we noted a large number of issues grew from when the split took place. So there was a number of items that were affected by the split, and the root cause of that being proper planning around how the split is going to take place. And then the SASSA issues that we identified in 2019 also became larger, because in the 2019 year, they were still a little bit small. So they spread throughout the different items of the financial statement. Also in the 2020, you would note that in this summary, we have been indicating in the emphasis of matter that, you know, there's going concern issues that the entity should be aware of. And then ultimately in 2020, it then became a reality where the going concern of the entity became an issue. So this was also one of the key drivers of the disclaimer of audit opinion over and above the number of items that we've identified. So what we noted was the split between the Postbank and the Post Office also added additional pressure in the financial health of the entity. In 2021, we've identified that, you know, majority of the issues that were raised in 2020 were not corrected. So we had mostly repeat findings that were reported. And also maybe just to highlight, in 2020, what we also noted is that a large number of resignations took place, more especially in the finance section, together with mostly key executives resigned in 2020, resulting in some of the issues that have been identified not being addressed in the following year. 2022, what we noted when we did the audit is that management did try to, you know, implement extra efforts to try and, you know, turn around the situation, the disclaimer situation. What we noted is that the going concern issue still remained. There wasn't much effort or wasn't much progress that was made within the going concern. What we also noted is that although some of areas that we had reported and identified, there has been a bit of, although there was a bit of progress that was made by management, however, it not result in overall improvement. Instead of the 17 items that we reported in the previous year, management was at least able to reduce it to 13. But that's just on the financial statement. The emphasis of matter, these are items that we'll include in the audit report for the users to have an appreciation of some of the issues that we feel are key for the entity. And then in terms of the report on the predetermined objectives, what we noted in the selected objectives that we audited is that all the three indicators that management reported, there were material findings, which I'll allude to as I proceed on the presentation. And then the report on compliance with legislation. So this remains a key issue, as a little improvement is being noted. Financial statement and performance report and annual report, this has been consistently reported on for the past 5 years. The procurement and contract management, also something that has been consistently been coming up. Expenditure management, strategic planning, consequence management, asset management was at least not identified, and revenue management in the current year. So we just mostly concerned on the compliance with legislation. From the audit work that we've also performed, we haven't really seen that much effort as compared to the effort that we've seen in the financial statements. So in the next table, we are basically just capturing the root causes as well as the recommendations on those line items that I've shown you on the table above. So speaking about the going concern and the limitations that we've experienced, we note that management has correctly included in their financial statement the losses, which sits currently at 2.2 billion, as well as the net current liability position, which is sitting at 6.5 billion. Our key concern, though, was that in some instances, you would find that there will be issues that we feel should be elevated to the financial statement level so that the user has a full appreciation of what are the concerns and some of the key areas that are contributing negatively towards the financial health of the entity. However, you'll find that that information is not sitting in the financial statement. In some instances, what we would note is we will note that the entity overall in the submission that they've provided to us, that they're sitting in a shortfall, which was a large amount. And that shortfall, it was indicated in the submission that it will be covered through government support, which at the time when we were doing the audit, we were not aware of any promising government support that was going to come through. The entity worked hard to prepare the turnaround plan, also in support of their going concern assumption. And however, what we noted is that the turnaround plan seems to be sitting at a concept level. Majority of the initiatives that have been included in that turnaround plan have not been implemented, and mostly the reasons that have been provided in the submission that we've looked at is that they don't have funds to be able to implement those initiatives. So we were basically not in a position where we could fully evaluate and assess and conclude whether if those initiatives were implemented, were they really going to turn the entity around. So as we see it currently, we are limited in confirming whether management is actually correct in concluding that the entity is a going concern. Based on the indicators that are currently in place within management, there's all the indicators of an entity that is commercially insolvent. We have also grouped all the items that we've identified that relates to the SASSA-related balances. And as I've indicated, that there were a large number of internal control weaknesses that we've identified, and all started when the project was implemented. To date, those controls, despite us having raised them for the past 3 to 4 years, some of them have not been implemented, and some of the financial statement line items still continue to be qualified. For example, the trade and other receivables, the trade and other payables. So both of them, they house all the SASSA-related transactions. So we are unable to confirm whether the figures that are shown by management, that indeed there is a data that is being owed to the entity, or there is a data that needs to be paid by the entity, and confirm if the figures that are being shown are actually correct. The next group of internal control weaknesses that we've identified. So mostly what we noted when we were doing the audit is that in most cases, you'll find that management relies on a lot of manual controls, and there are a lot of reconciliations that need to be done, which some are being done, but they're not necessarily monitored and reviewed, and there isn't a mechanism in place to ensure that the accuracy of those reconciliation, and also the record management process is also not being properly done. So in most instances, what we find when we coming to do the audit is that some information which is key and critical in supporting some of the financial statement items is not provided to us. In most instances, they'll indicate that this information is information that sits at the branches. However, it's not then sent to the head office for the head office to properly keep records of it and maintain it properly. And in most instances, though, the manual controls that are being referred to that are generally highly used to support some of the information, they come as a result of when instances of systems that are offline, and therefore when the system is offline, they then need to then capture manually some of the information. So what then happens is that instead of when the systems are now online, or whoever who's now going to be designated to capturing that information, that process in most instances, we don't see it happening. And as a result, there's key information that's being lost in the process. So that is amongst most of the root causes that are resulting in a lot of this repeat findings. So in most instances, it's not a matter of management is not willing to assist and provide us with the information, is mostly because the information is not there, it has been lost. And then in some cases, like for example, in the IFRS 16 issue that we have noted here, we have identified that management is also willing to try and resolve the issue. However, there will still be, there's still that issue of capacity within the finance team, or capacity and them being able to source the relevant resources to enable them or to assist them to be able to clear the issue. Like, just to give an example, this is a very intensive exercise. It will involve it will involve the entity having to go through all the lists, the different lists that they have. So they're sitting with a large number of lists. So going through that project, it requires quite a time to be invested, and also requires quite a lot of resources to be invested. And currently, when we evaluate the capacity that is available within the finance team, we can clearly see that they do not have the right capacity to be able to resolve the issue. Although progress has been made, and hopefully in the next year it will be cleared. Another one that I would just also like to quickly touch, it's on the non-current assets held for sale. So non-current assets held for sale, it's something that we've identified also for the first time in the current year, and also resulting, or it's coming through as a result of the capacity and resource constraint that the entity has. And as a result, we find that they do desktop exercises instead of going through the whole population and going back and ensuring that, you know, the information that they have or they capture ultimately is correctly reflected in the financial statement. So just to summarize the issues in the financial statement, so management is encouraged to ensure that processes are in place from day one, so that they can avoid a situation where now they have to work backwards, and the issues to be resolved now require large investment in time and a large investment in resources. So if from the start, when a project is being implemented, such as, for example, the SASA, processes are already in place, they've thought through how things should work, and all the relevant controls are also in place. The next items are just emphasis of matter, like I mentioned. These are the areas that we identify in the financial statement, and we feel they are key for the user to note. It's information that's already disclosed by management. We are just emphasizing it. And then the next items, it's compliance. I've also spoken about compliance. So mostly what we are noting here is that we have action plans that we sit and agree with management at the start of the financial year. However, for whatever reason, they not get fully implemented, or if they are implemented, the implementation is not adequate for some of the issues to be resolved. To make an example on the consequence management, we've been talking about consequence management. You would have noted that the entity has a large amount that they report on irregular expenditure, as well as fruitless and wasteful expenditure. as well as there are a lot of fraud cases that are being identified within the environment. So we have stressed over the years that there must be consequence that is taken by the entity to ensure that, you know, everybody is held accountable for the actions. So what we then noted in the previous year when we were doing the audit is that management actually did make an effort to try and develop a system that resembles some sort of consequence management. However, when we started doing the audit, we then noted that the adequacy of the information that's being provided to us is not allowing us to be able to support or conclude together with them that they've actually done the processes as required by the prescribed framework. So as a result, we then concluded that we are limited in confirming that proper processes were being followed to conclude on the cases that they've identified. So you'll find instances where you are provided a report, and in that report, there's a list of cases and there's a conclusion at the end where it says that nobody should be held accountable or nobody was noted to be at fault. So what we will then do as auditors is that we'll then request to see what is the processes or what are the different steps that have been followed by management to be able to conclude that nobody should be held accountable or nothing has been identified that indicates that somebody has wrongfully done something. You'll find that that information is not present, and as a result, we then end up concluding that we cannot confirm if the appropriate steps have been followed to ensure that the right consequence management has been implemented and has taken place. Procurement and contract management, these are also issues that we've been reporting on. More especially, what we noticed that in instances where services such as the rendering of dignity services, that procurement of the dignity services, there's quite a lot of instances where you find splitting when appointment of those service providers. To date, we haven't been able to successfully conclude on a way forward on how management is going to manage this in the future. And then the audit of predetermined objectives, like mentioned, that the 3 indicators that we have audited, they all resulted in material findings that we've identified. And then the strategic objective that we've audited is the one called efficient systems and processes. We felt this one closely reflects on the key mandate of the entity and the key drive that they want to achieve, which is ensuring that they have a more efficient operating post office. So the indicators that they have, or rather the indicators that they've predetermined, is 1, achieving a regulated mail delivery standard, and 2, maintaining a system available uptime at online post office branches, and then the last one, rolling out of IPC equipment. So what we noted with the achieving of regulated mail delivery standard, when we requested for information in order to support what they've reported, this was not provided. For this indicator, when we asked for the information was provided to us, but it wasn't adequate enough for us to be able to use it. And the reason that was provided was that they've experienced a lot of network failures, and as a result, the adequacy of the report that was generated from that system was therefore not in a good auditable condition. And then the last one, which is the rollout of IPS equipment. With this one, when we did the assessment, we could sort of see the lack of coordination and poor planning. So you have projects that are planned, but there isn't that necessary resources in order to be able to support, the rollout of that of those IPS equipment. So as a result, they ended up concluding that they didn't have funds to be able to implement it. Okay, irregular expenditure. So irregular expenditure, we've noted an increase of 612 million. And then on fruitless and wasteful expenditure, I'll also just like to highlight here that even though you are seeing a decrease in the fruitless and wasteful expenditure, when we did the audit, we actually noted a write-off of 648 million. So this write-off, when we tried to and understand why management was writing off that 648 million, we could not be provided with, adequate information that could enable us to agree with management that that write-off should have taken place. If you look at the summary, the table that we have above, you'll see that fruitless and wasteful expenditure is actually one of the items that we've qualified. And the reason why we've qualified is because of this write-off that we could not support. So in actual fact, the movement, the decrease that has been reflected, but management in the financial statement, we cannot support. Okay, the next item that I'm going to touch on is on the material irregularities. So the parts that I've skipped through, those are basically recommendations and some of the key items or the top contributors of the irregular expenditure and the fruitless and wasteful expenditure. So we have material irregularities that we've identified when we did the audit. Material irregularity, as you all know, this is one of the areas that we've added when we expanded our mandate in 2019. So there are items that were previously reported in the 2021 annual report. It's related to the issue of the internal controls weaknesses within the SASSA grant payment system, specifically on the system that is being used to make payment, which is called IGPS. So when we made an assessment, we identified that this IGPS was actually procured by the post office before, the split between the post office and the Postbank. So when we made our analysis on who do we place the blame on between post office and the Postbank, it was more fitting for the post office to take the responsibility in this case, as they were the ones that were responsible for ensuring that, the adequate controls are in place before they procured this banking payment system. So that's why this material irregularity was therefore then handed over to the post office. So what we did is that we issued the notification to the post office. The post office then responded to us by indicating that they have no rights to the Postbank, as the Postbank is now a standalone entity, and they are the ones that have taken ownership of the IGPS. So that also posed a bit of a legal conundrum for us as the auditors, and also just taking into account that, the material irregularity is also fairly new within the organization. So there were quite a lot of new learnings. Although the conclusion, after we had intensive discussions internally, also including consultation with our own legal team, it was still concluded that the material irregularity is sitting accordingly in SAPO. However, the further actions that could be taken, because it was clear from the time when we did the audit and we were evaluating if those internal controls, even in the year when we were auditing, have been addressed, and found that they still have not been addressed. It was therefore indicated to us that the best way we can take this forward, as it's still valid and there are still controls that still need to be implemented and have not been actioned, we therefore then concluded that the best suited entity that can take this forward will then be the DPCI. So we've referred this matter on the 14th of July 2022 to the DPCI. One, because of also the fraud element, in the fraud element part of it that is involved, because there's a lot of fraud that is taking place, and we could tell that they're taking advantage of the internal control weaknesses that we have been reporting on. And two, there are many other similar instances that are already being investigated by DPCI. So we felt it would be more fitting if they could also include this as part of their investigation. And also, I think we also could not internally be able to resolve, the conflict between the two entities on who should take accountability. Because when we tried to take the matter to the Postbank indicated that the decisions were made by the post office. It's unfair for them to be penalized on this. And Postbank was saying, but the system now sits with Postbank, and we don't have jurisdiction in implementing any form of remedial action within the Postbank. Okay. So as a result, that's when we then decided that the PCI will then do further investigations, which they are currently busy with those investigations. Okay, the other matter is going concern. I think I've spoken quite a bit on the going concern, and I've also touched on the turnaround plan that management was meant to implement in order to be able to turn around the entity. So the graph that you see, we're just trying to also just further elaborate and give a bit of context in terms of what is it that we are noting and we're seeing, and why are we then not concluding that and agreeing with management that the entity is a going concern. So the first graph that you're looking at, it reflects the revenue, expenditure, and the profits. As you can see, the revenue is declining. So it's been on a slightly sharp decline since 2019. And the expenses are slightly, steady, but slightly increasing. They're not moving at the same pace as the revenue. The next graph, it just illustrates the cash versus amount that needs to be paid. So I'll just indicate, one of the key events that have taken place over the years. For example, here you see a high spike in the cash and cash equivalent. So what happened is that the entity did receive a bailout. You can also see that, the payables, they've managed to at least clear some of their expenses for that year. And then in the next year, in 2020, this is when Postbank, which held a large amount of cash within the group, then became a separate entity. And as a result, there's now, less cash that's being held by the entity. And a sharp increase in the payables, also a sharp decrease in the profit that they generate. And this has been something that has been noted, and it's getting a bit worse over the years. Okay, so in the next paragraph, which is paragraph 9, we are just touching on the status of the internal controls. As you can see, these are all the key drivers of the internal controls. In the instance of SAPO, we have then indicated that all the key internal control drivers, there's intervention that is required. So in terms of oversight responsibility, there's intervention that's required. Risk and management, there's intervention that's required. The area or the governance processes that's being played by the audit committee, internal audit, there's also intervention that is required. We've detailed in a little bit more detail on why we have rated the entity the way we have, so which I will skip through. And then assurance providers, in order for an entity to effectively operate, it depends on some key individuals or key committees that should all come together. So we have then done an evaluation on the assurance providers, as we call them, and we have indicated our reasons and evaluation of an assessment, so conclusion on the assessment that we've done on whether those assurance providers, are they providing assurance as they should, or are they providing limited assurance, some assurance, or there's assurance that's being provided. So for an entity with a large number of the issues that they have, it will really be strange if we could conclude that there's an assurance provider that is providing some assurance, because one way or another, some of the issues should have been seen by almost everyone in the assurance provider cycle. And if things have been missed, that means there is someone that is not playing the role that should be played accordingly. So we've provided the reasons in detail, but just on a high level. So we've indicated that senior management, and they're not providing any assurance. Accounting authority, audit committee, internal audit, they're all not providing assurance. We have at least been able to get a sense of the support that the executive authority is providing. She's been actively involved. We've also had numerous of meetings, some of the commitments that she's made, we've seen her implement. So we were comfortable with some of the assurances that she provides. Okay, so the last part of the presentation, we are capturing the key recommendations to the committee. So the first part, we are really just talking about recommendations to the accounting authority. And the reason why we've included it under the key recommendations to the committee, because we would like committee members to also exert influence on the recommendations that we are making on the accounting authority. So we would like the accounting authority to, to ensure that they implement the audit plans to be able to address all the prior year qualifications. We would like the accounting authority to ensure that there's a bit of stability in management. There are key vacancies that we've identified that will need to be filled urgently, and some of the key role players that should come to the party in order to implement the turnaround plan. We would like address the issue of, the concept that we've looked at in the turnaround plan to eventually get to a point where it's fully implemented. We would like the institution to also focus on the financial health. And, the financial health is mostly strongly linked to the turnaround strategy. So if the turnaround strategy is implemented, we would then be in a position where we can evaluate if the turnaround plan is actually being effective.
Just one second. Honorable Hattab, I see your hand.
No, Chair, I want to be the first one when it comes to questions. Sorry for distracting.
Oh. Yeah. Oh, okay, sure. All right. Sorry about that. You can proceed.
Okay, thank you. So the committee should be able to track the issues that we raise. Call the accounting authority to account. More especially on the turnaround plan, which we have been speaking about a lot. So basically that is that from myself. Thank you, Chair.
All right, Honorable Hattab.
Thank you, Chair. Don't worry, AG, do not worry. We will call them to account and they will account, most definitely. I can assure you that. Thank you so much for your presentation and recommendation. Chair, I don't want to sound like an old record with a scratch, but I see here it's even worse, the issue of a going concern, because the report paints a picture of an entity with significant financial losses with no sustainable income, and an entity that has severe financial distress, according to this report. Now, initially wanted to ask, when the first slide says the entity did not successfully implement the turnaround plan, I wanted to ask whether or not, by not being successful, do you mean the plan was implemented and then it did not yield any positive result, or they failed at all to implement the plan? But somewhere along your presentation, you then indicated that the excuse or the explanation from the management was that no funds to implement the turnaround. Is this the entire turnaround strategy? Where were there any instances where the plan was implemented or the entire plan was not implemented at all? Now, Chair, on slide 6 again, you raised, the AG raised an issue about the instability and capacity challenges, including the board member, which has resulted in the slow implementation of the strategic initiatives of SAPO. Does this say to us the current board is having challenges when it comes to capacity? Is the board not capacitated to turn around the post office? Is that my reading of what is contained here? Again, my honorable chairperson, on slide 8, there's mention of fruitless and wasteful expenditure that have been modified due to, okay, let me read exactly what is contained here. Fruitless and wasteful expenditure has been modified due to the lack of support documentation to support the write-off of fruitless and wasteful expenditure. The board approved the write-off of fruitless and wasteful expenditure with no evidence that proper procedures were followed. Now, firstly, please school me here. What do you mean by modified? The wasteful expenditure have been modified. I just need an explanation on that one. Now, does this mean the board's action or conduct in this regard was inconsistent with the legislation? In other words, their action could be tantamount to unlawful conduct or unprocedural act and can be challenged as null and void. Is that what you are saying here in relation to what the board actions were in writing off the fruitless and wasteful expenditure without proper documentation, and how much was written off? Again, material losses due to criminal conduct. Earlier on slide 6, there was 2.2 billion losses. Is this amount in relation of these criminal conducts that you are talking about here? Is this 2.2 losses as a result of these criminal conducts? And have you ascertained what were the steps taken to try and recover such, or has anyone been identified for criminal actions to be preferred against them? Chair, the next question, again, I will require their indulgence in terms of schooling me here. Material impairment of 703,993,000 rand. I can pronounce figures, Chair. Were incurred as a result of impairment of loans to the courier and freight group. Please, can you school me? What do you mean by impairment of this huge sum of amount of money? Moving right along, Chair. I think still on the same slide. Other financial assets. Here you make mention of 861 million were withdrawn from the PRMA investment, and there is 2 sections where it says not applicable, not applicable. Do you mean that as an AG you could not ascertain what was the money used for? Did you, if that's the assumption or I'm correct, did you find out what was this money used for and who withdrew the money? Why is it reflected? And then next to it, there is an indication of not applicable. Chair, those are my questions for now. And I must make a disclaimer, Chair. I'm in between two meetings, but I am able to have a balancing act in terms of my oversight work. Thank you so much, Honorable the Chairperson.
All right, thank you very much, Honorable. Let's get to Honorable Lisa's questions and then responses. Mazambane, over to you.
Thank you, Mr. Chairman. I'm just going to turn my camera off, I think, because I'm in a bad area here. Mr. Chairman, through you to the AG, clearly this is definitely a case of not being a going concern and also reckless trading. And so that's something we'll have to deal with. But Mr. Chairman, the question to the AG is the liabilities now are massive if one looks at the graphs and so on. What is the possibility of the post office being forced into liquidation by creditors for non-payment? Is that likely in your opinion? And then, Mr. Chairman, have the statutory payments such as PAYE, SDL, UIF, etc., been paid across to SARS? And we know that medical aid deductions and contributions had not been paid, and I believe have now been paid. But have the statutory payments been made? And if not, does your office, the AG, not have an obligation then to raise criminal charges against the accounting officer, because it's a criminal offence not to pay those across? So does your office not have that obligation? If you are aware of a criminal activity or criminal action on the part of your auditee, surely you have an obligation to raise or open criminal charges. Thanks, Mr. Chairman.
All right, let's get responses to that set of hands. If there's follow-ups, we'll indicate.
Chair, can I also add so that they can just respond all at once?
Sure, that's fine.
Yeah, no, thanks. On slide 16, the graph and what it reflects to us, AG, are you saying the unbundling or separating the entity has also contributed to the financial crisis that we are observing at the post office? In other words, that strategic move did not yield any positive results at all based on what we're seeing in front of us. Thank you.
Okay, thank you, honorable members. Thank you, honorable chair. I assume I can go, honorable chair. I will lead in some of the questions, and I will still be assisted by Joyce in the responses, honorable chair, honorable members. I'll start with maybe the more recent ones because they're fresh in the memory and I just wrote them down. So yeah, the long and short of what the last question was, honorable chair, through you, the long and short of the answer, the long and short of that is that yes, it did contribute, but it's not as easy a discussion as that, because if you have an institution, honorable chair, it's got a couple of divisions, and you take the one division away and you put it as a separate entity, but it's the most profitable division, it means that the remaining divisions which were not profitable will then sort of be the exposed, if I can term it that for lack of a better word. So when the Postbank was within the post office, it was its most profitable division. So as soon as it got stripped out, you then take the most profitable division, you put it on an entity's own, and the institution that then remains, whatever remains, then the operations of that part of business are unfortunately not able to carry their own operations. But if one considers the nature of both sets of accounts, they are very different in the sense that the one is related to the banking services. So therefore, the strategic intention to then move it to its own separate entity, obviously that will still stand. But the strategic intent still remains with regard to what do we do with the post office, because on its own, the post office should still be a profitable organization, bearing in mind, like we mentioned with the other institution as well, that it also does still serve a social mandate or that it has a particular role to fulfill in society, but it should still be at least able to carry its own cost in this regard. So the operations that remain, the postal services, the courier services, that's where the challenge lies in terms of making those operations profitable. So I think I'm trying to diplomatically answer that particular question, because obviously there are some other strategic reasons with regard to separating the bank, but the long and short is, as soon as you strip away a division in any particular environment or institution, you strip away its most profitable division, then the remaining divisions, if they are not operationally efficient, they will then obviously be exposed. And I think that's all that's happened is those inefficiencies have been surfaced in this regard. And therefore, when they are reported on their own, they then represent and translate into the gross numbers that we've seen today. I think, Honorable Chair, Honorable Members, that particular aspect of the conversation will also lead me into the next part of one of the questions that was asked by one of the honorable members, insofar as it relates to the material losses to criminal conduct. So the question actually had about 3 parts of it. So the first part is the 2.2 billion. So Honorable Chair, Honorable Members, the 2.2 billion is not just the losses that were suffered as a result of criminal conduct. So the overarching principle is that the institution is not making profit, and that's the big amount that we see. It's the operational profit, or the operational loss rather, that we see as a result of it not being able to generate revenue to cover its cost. However, the second part of the question, where we talk specifically about losses suffered as a result, direct result of criminal conduct, we do highlight this as part of our briefing note as well, because honorable members would recall that the PFMA bestows certain responsibility on management to also go and conduct certain steps and certain tests in order to make sure that these cases are duly investigated and they are being followed up. So if you'll see how we have reported it in the current financial year, we did not report a specific instance of non-compliance. So in other words, we acknowledge that certain work is being done in the background. All we've done is we've just emphasized it. Honorable Chair, Honorable Members would recall that on page 8, the Office of the AG would ordinarily, like Joyce mentioned, emphasize certain things to the users out there, even though they do not necessarily result in a particular unfavorable outcome. So this is something that was disclosed by management themselves, and the processes are ongoing in the background, and we are just emphasizing it again, exactly to spur on engagement and conversation, because we shouldn't be suffering any losses to begin with, and not much less even worse losses as a result of criminal conduct. But we did not report any instances of significant non-compliance where management did not either do the reporting or where they were not following up adequately in this regard. So processes are ongoing in that regard. Then linked to that, there was also a question that was asked with regard to the modification. What does it mean for modification in terms of the wording? So I do apologize if our slides then contain technical jargon, Honorable Chair, Honorable Members. So essentially, modification just means it's a qualification paragraph. So you'll see on slide slide 8, right at the top of slide 8. It starts on slides 6 and 7. On page 6 and 7, those are the qualification paragraphs. So those are paragraphs where, as the Office of the AG, whatever management reported in their financial statements, we either did not get sufficient and appropriate supporting evidence, or we were not in agreement with the balances that were disclosed. In other words, they contained material misstatements, and hence they then made their way in terms of being a qualification paragraph. The word modification is just a substitute for the word qualification. Qualification, which is now the second part of the question, stems from the fact that management, after we reported the fruitless and wasteful expenditure, and management also did some determination test, they bunched up the fruitless and wasteful expenditure, and they then had a figure. But remember, the PFMA also then requires management, Honorable Chair, Honorable Members, to then go and institute proper investigations, so that, like I mentioned earlier, to do the proper root cause analysis, implement remedial action, implement improvements to the systems of internal control, and ultimately also hold people accountable in terms of consequence management. As part of that, you can only, once you've done that process, and you know what exactly went wrong, and you fixed your things, and you've held people accountable, then can you engage in a process just like irregular expenditure, also then continue in the process of writing down the balances and removing them from your financial statements. So unfortunately, in the current year, management tried to do a process. So they commenced a process whereby they did some high-level determination tests, like Joyce mentioned earlier, and those tests and those efforts that they then performed were not sufficient and appropriate, and or in most instances always supported as well. But then management still proceeded, or the board still proceeded to then write off these balances. So then we come and we say, but hold on, last year you had a big balance of fruitless and wasteful expenditure. Then PFMA says you must go and investigate, and only once you've concluded your processes, then can you start writing it off. Likewise with irregular expenditure in terms of the condonation process. But for you to write it off because you're taking away the figures from the financial statements, you also then need to support those adjustments as part of the audit process. So when we were then, as part of the performing the audit in the current year, engage management on those write-offs, those adjustments that they had made were not always informed by a proper process that we could determine, or as supported by a proper process that we could then also get the information and gain the necessary comfort and satisfaction around that, so that we can then agree with management in terms of those write-offs that were made. So there was a process that was embarked on by management. And I'll give you an example, Honorable Chair, if you indulge me. They would, for example, say, and it will also lead us into the next question, they would, for example, say we incurred fruitless and wasteful as a result of penalties and interest we paid as a result of some of the late payments on the statutory payments that are required. So on VAT and on PAE, when they were not paying SARS at a particular point in time, the SARS would then levy the penalties and interest. And then we would then obviously say it results in fruitless and wasteful expenditure because you've made payments in vain. And then they were then supposed to go and explore and say, if I look at the whole suite of the payments that I've made, the deemed wasteful payments, do they all fall in that particular criteria? Did we not have money on the date when the payments were required? Or did we indeed have money in the bank and we could have made the payment, but an official did not release the payment and therefore we incurred fruitless and wasteful expenditure? So those determinations and the distinctions were not always made at a particular point in time. So management just sort of said, well, we don't have money and we know we're incurring fruitless and wasteful expenditure as a result of late payments. So therefore, the root cause is as a result of the same thing. But we're saying you didn't do a proper analysis and assessment because you're supposed to demonstrate that, you know, indeed that was the case. And that's hence what informed the qualification or the modification for substitute. And that also then will lead us into the next question. Joyce, I'm going to hand over to you after this question, the one that spoke about the statutory payments. So yeah, it is a bit of a tough one, but again, it's not from our side. Our primary mandate, honorable members, is to perform the audit, and once we've identified these things, is then to highlight them and elevate them, which is what we've done in terms of some of the reporting we've done, and how management has then also proceeded to then not pay and comply with those payments on time. We'll pick it up normally in the fruitless and wasteful expenditure cycle, like I've just explained, where they may not have affected certain payments, but in so far as the other statutory payments are concerned, they actually do make those regularly. It's just that they do make them quite late in this regard. So from that point of view, we also sort of have to acknowledge and appreciate that at least some payments are made by management from that point of view. Then I'll then hand over to Joyce, who will deal with some of the remaining issues that I may not have touched, especially insofar as it relates to the instability and then the impairment and the other financial assets, the PMRA one, Joyce, and then the liquidation one. Thank you, Honorable Chair. Thank you, Member. Joyce.
Thank you. Okay, so I'm just going to go straight to the areas that were not covered. So I think the first one was the going concern. The question that came through was that were all the initiatives not implemented, or were there some that were implemented, and where does the issue lie? So there are some that have been implemented, but majority have not. And like I mentioned, in majority of the cases, you'll find that you look for the manner in which it's designed, the certain information that you're going to need to be able to verify. For example, you'll find that an assessment would have been made, right? And you would have expected that other considerations or other costs around it would have need to have been considered as well. So when we do the assessment, we'll then say, fine, you've taken into account that you're going to save costs by, let me just make an example, by giving these packages. But have you considered how much it will then cost for you to or what is the cost to the entity once you've lost those skills, or what is then the plan going forward. So it will be, such additional information that we are not sufficiently provided in order for us to be able to properly evaluate and see if, the initiative will actually work and be able to provide the benefit that management is hoping to get from it. So in most cases, that is one of the example, and in some cases you find that it has not been implemented at all, and the conclusion that is provided is that there are no funds, or halfway through the initiative they had to stop because they ran out of funds, or they had to reprioritize the money that they had. So those were mostly some of the conclusions and the issues we identify as we're evaluating the going concern and going concern linked to the strategic plan. And then there was a question on the capacity at the board level. So you remember, Chair, that there has been quite a lot of movement at board level. There were resignations, there were some members that were dismissed. So what we are raising in the briefing note and in our presentation as well as one of the key issues is that if you have those constant movements, the plans that you have are likely not to be implemented. So we were then, raising the fact that the issue of stability, that, if you have stable members, then they are able to at least see through some of the plans that are in place. And then the frivolous and wasteful expenditure, the write-off, I think it was sufficiently covered. The member asked the amount, how much was written off. We have it, it's sitting in page, let me just see if I can find it, but it's a 648 million that was written off. That was not sufficiently supported. We could not conclude why it should be written off. And then material losses, just to give an example of what sits within the material losses. In most cases, it's heist. So it's heist when the vans that carry money to distribute in the different grant pay points where money gets stolen. And then in some cases, it will be when the SASSA beneficiaries are not able to claim their money for whatever fraudulent activity that might have taken place, the reimbursement that is then done by the post office. So that's what makes up the figure that we've shown, that has been shown by management in the 2.2. And then the material impairment, the write-off of the loan. So this is the loan that was provided by SAPO to the subsidiary. The subsidiary is currently not in a position to pay SAPO. So SAPO then made the decision to write it off. So basically that's what we are seeing there as the material impairment write-off. And then the other financial assets, I think the question that was asked by the honorable member is that why do we have non-applicable, non-applicable, non-applicable? It's because we have root causes and what is the key recommendation? So the root causes that we are highlighting there are root causes that resulted to a finding. So the other financial assets on the PMRMS, it's an emphasis of matter, but not necessarily a finding that we've identified. So that's why we are not saying that there's an issue there and what the root cause is and what's the recommendation. All that we're doing is just we're drawing the attention of the user to that line item. That is a line item of interest, and for them to be able to make decisions, they must just be aware of what are the key activities that are happening within the PRMS. And then the other one that was asked was, can SAPO be forced to liquidate by the creditors? If you look at the Act and how it's written, yes. And then do the criminal charges, I think it was then covered by Andres to say, are we in a position where we can where we can report criminal charges due to failure of this payment? Yeah, I think that one was covered. Thanks.
Okay, Mazamba, I see your hand is up. Is it a new hand or a historic hand? All right.
It's a historic hand, Mr. Chair, but yeah, the AG is hedging a little bit with replying, but yeah, they've given a reply, so let's leave it at that.
All right, AG, next presentation, please.
Honorable Chairperson, thank you, honourable members. We will now take the last presentation from the comms portfolio. So that presentation will now talk to the outcomes of the Postbank. Honourable Chair, honourable members, it will also be the first time that we are briefing the SCOPA on the outcomes of the Postbank. The Postbank used to operate as a division of the Post Office until it then became its own entity. And unfortunately, over the past 2 or 3 years, financial years, it has not tabled its annual report. However, the minister then duly undertook to table the audit report, or committed to table the audit report, the annual reports, which was then done on Friday. From that point of view, it means that the presentation will therefore also reflect on context with regard to the number of years of the bank, or the bank has been in operation as its own entity. And Joyce will also assist us in leading the presentation. Honourable Chair, honourable members. Joyce, over to you. Thank you.
Thank you. So I'll just start by showing you the audit opinion history of Postbank. So Postbank started as the Postbank SOE Limited. It started as a government entity, while the Postbank, as we know it, was still a division of Post Office. So we do audit dormant entities, and we do express an opinion on dormant entities. So for years in the 5-year history that I have, they have been receiving unqualified audit opinion. And then first time when they became a standalone entity, this was in 2020, we identified significant issues. So significant issues were also just coming from, the similar type of issues that between themselves and Post Office shared, like the more common services that they provide. So the split therefore saw both Post Office and Postbank not being able to correctly reflect, the financial, fairly reflect the financial position of the entity for that year. They therefore then requested for an extension, Chair, which was then granted, looking at, it was a new entity, the board was also new, and they had a solid plan on how they plan to resolve. And also just from our side, we also wanted to show our commitment in supporting the entity's plan to become the first state bank. We're able to clear the issues. However, the similar issues then saw themselves coming back in 2021. And unfortunately, we therefore stick to our, normal audit timelines. And as a result, they could not be able to clear, those same issues. And the reason why we didn't grant the extension is that we also just didn't want to create a precedent of, every year there will be an extension that will be granted. And that's the only way in which they're able to report favorable audit outcome. So we've indicated to them that there are certain issues that are clearly need to be resolved. The entity should just properly plan and implement the necessary controls, be able to ensure that at the end of the financial year, the financial statements that are presented to us have at least a fair presentation, and to also limit the type of audit outcome that they get. In 2021, they ended up with a disclaimer of audit opinion. The biggest driver or the key issue that the entity currently sits with is also originating from the SASA distribution process, which I've mentioned when I spoke about the Post Office. that we currently have a material irregularity relating to the grant payment system that they use, which is called the IGPS. So the banking system that they use to make grant payments. So that grant payment system, ultimately it results in information that sits in the financial statement line item called the other deposits grants. So the other deposit grants, this is basically the amount that is not distributed for the year. So the money that they hold at the end of the financial year relating to grant that is owed to the beneficiaries. You also have the transactional fee. So this is the fee that they basically generate from the transaction that they have in place between themselves and SASSA. And you also have a portion of intercompany receivables, which also, or another one, sorry, another key one is the other reserves. So other reserves, it also houses transactions relating to the SASSA, which is an amount that was taken over when the split took place in 2020. It's basically this line item, which I mentioned that it's the liability that is owed by the entity at the end of the financial year. It was then included in other reserve when it became a standalone entity, since there was an amount that was coming through from the post office. So you can already see from me just trying to illustrate all the different line items in the financial statement that are as a result of the internal control weaknesses within the IGPS, just to illustrate how, when I mentioned earlier that the process in which the contract was taken over, the environment was not, in terms of the internal control, we're not ready to be able to nicely house the process, as well as the payment system that was therefore implemented. There are certain key things that you expect in a system that makes such large volumes of payments to individuals. If you compare it to, a normal banking system, there are a lot of controls that it doesn't have, and as a result, there's a lot of major issues that are being reported that are being identified by us as we're doing the audit. So we are unable to confirm, first of all, if the liability that is shown at the end of the financial year, which is the grant that is owed to the beneficiary, if it's indeed that amount is correct. We are therefore, as a result, unable to also recompute whether the fees that have been also shown in the financial statement as revenue that they've generated or expenses that they've incurred is indeed a correct figure. Over and above, there are also some issues that we've identified that are mostly more entity specific, like, for example, the issues of that was identified deposit from customers. So deposit from customers, this is the manner in which management is able to maintain the deposit slips and withdrawal slips that are as a result of the transactions that happen within their environment. So what we noted in 2021 is that we could not obtain sufficient evidence for us to be able to confirm if the total deposits amount that they've shown is actually a correct figure. And that also was one of the main contributors of, or rather one of the key drivers that resulted in an entity ending up with a disclaimer of opinion. Because if you think about it, that is the key, that is basically the key or main business of the entity. So if your main business is affected and how it's reflected in the financial statement is not correctly done, that is then one of the reasons that we considered in making an assessment of the pervasiveness of the issues that we are identifying within the entity and ultimately affecting the financial information. We also identify similar issues in 2022. It's just that they were not material enough for them to be reported in the audit report. So it's not a case of that issue has been cleared. It hasn't been cleared, it's just that it wasn't as material. And one of the key issues that we are identifying within Postbank is that Postbank is mostly manual. It's an environment that operates with a lot of manual controls. And if you compare it to, you know, a normal bank, banks are usually, you know, at the what you call the forefront of, you know, implementing a lot of technological developments and simplifying their processes. So for bank that for the type of manual controls that we are identifying and seeing within the Postbank, it sort of makes it difficult for us to also perform the audit, because you find in some instances some of the controls that should have been implemented end up not getting implemented because one, they don't have the system to allow them to perform that process quicker. For example, I'll just make an example: reconciliation. So reconciliation of the transaction, the withdrawals and deposits that happen. So you can imagine the volumes of transactions that take place. So the entity needs to be internally comfortable that the information that they record within their own accounting system agrees when you're comparing it against the external source, which is in this case the banks have, which houses all the transactions that takes place with all the banks. So in such an instance, what we're then noting is that there will therefore be differences that we note when we come and we perform the audit. And when we request for management to provide us with a process that they follow to ensure that those differences are identified by themselves and they are able to clear them timeously, they'll then indicate to us, you know, that process is not being followed and it's humanly impossible for that process to be followed. And then you compare that to how others are doing it, because we went as far as if they're saying it's humanly impossible for that process to be done, does it mean that all the banks are exposed and are sitting with the same risk? What we identify is therefore that they have processes in place internally that they perform to ensure that, you know, those controls are implemented. So it's just a matter of the entity has not invested in the latest technology to allow them to be able to perform certain basic controls that are expected to be seen in a banking environment. So there are also areas that we wanted to emphasize to the user. You'll see that the material uncertainty relating to going concern. I'll just touch a little bit more detail as I go through the briefing notes at the bottom. Restatement of corresponding figures, and then another one, cybersecurity incident. I'm sure you've heard about this one. And then in the predetermined objectives, what we noted is that there hasn't been material findings. If there has been material findings that we identify, in most instances, management will then resolve those issues, so they will end up not being reported in the annual report. So as you can see, no material findings were reported. But there's some years where the material findings were identified and management was able to at least correct them before we could report them in the annual report. And then compliance. Compliance seems to be the area where we are not seeing an improvement. So you can see in the past 3 years, we've consistently reported on the financial statement performance and annual report. This is basically us reflecting on the quality of the annual reports, quality of the financial statement and performance report. And the procurement and contract management, there's constantly issues that we are identifying. We'll elaborate more as we continue with the presentation. Expenditure management, consequence management, and revenue management. So maybe just to highlight on a little bit more detail, I think I've spent a bit enough time on the financial statement. We have noted and highlighted that, you know, there isn't any adequate reviews that are being done to ensure that the information that is provided to us is accurate. And also the regular reconciliations. Some reconciliations are not done at all. is stated due to indications of volume. So meaning that the correct system is not deployed by the entities to ensure that those key reconciliations are being done. And there's also a over-reliance that we've identified. The entity still relies on the post office for some other key processes, such as IT services. So IT services are still being provided by SAPO. The infrastructure that the post office the Postbank is using, it's still that of the post office. And the post office hasn't been able to upgrade that IT infrastructure. The reasons provided to us is financial constraints. So that also is one of the areas that we've noted that pose a very high risk to the entity that is vulnerable to cyber attacks. So we've indicated the IGPS being the grant payment system, which has a lot of key loopholes that are currently being taken advantage of by fraudsters, and there has been quite a lot of amounts that have been lost and reported. We've noted that the slow progress in management implementing some of our recommendations, although there has been some implementation that has been done. Lately, we've noted with the new interim CFO that there has been a bit of traction in trying to implement some of the recommendations. We will see, the progress when we do the audit in the current year. So there has also been a risk that has been noted as a result of the implementation of the recommendations that were provided by the South African Reserve Bank. There was a variation order that was issued by the Reserve Bank. This also comes after a directive was issued in 2019, if I'm not mistaken, after they've noted a lot of fraud taking place within the SASSA grant payment. So those controls were not being implemented. The cards that the South African Reserve Bank requested that the bank writes off are still to date being used. So those are all the issues that were noted by the Reserve Bank, and the reason why they decided to formalize and issue the variation order and provide due date. So what we then did is we evaluated the disclosure that is being made by management, because management had to make the assessment to see what impact that has on their going concern. Because some of the issues that were raised by the South African Reserve Bank was that should they not implement, the recommendations that have been made, they will remove them from the payment, from the national payment system. So evaluation had to be made by management to indicate what would that mean for them as a business. Would it mean that they would not be able to trade? So management was able to reflect and indicate that they do not see that happening, and they've also indicated what are some of the processes in place. So we've also proactively engaged with the Reserve Bank to also just get their feel and overall assessment on the processes or what they've requested, if it's going to be implemented or not. So we were then able to, taking all of that into account, we were therefore able to just include an emphasis of matter in our audit report instead of reporting that the entity has a going concern issue. So what we've done is that we've then just highlighted to the user that management has reported the variation order. They've also indicated how they are managing it and how it's not affecting their going concern. So we've just emphasized for the users to be able to note that key event within the entity. And the material losses come as a result of the cyber incident that took place. We'll also just cover it a little bit in more detail in the presentation below. Okay, I'll just go through the compliance. So compliance, I've covered majority of the items that I've indicated were reported as non-compliance by us. So issues of irregular expenditure, fruitless and wasteful expenditure, not appropriate actions have been taken by management to prevent it, are some of the issues that we are identifying. Consequence management. So with Postbank had, in the past, what we noted is whenever we ask for the process that they follow to implement this consequence management, they would always refer us to, a policy or process that is SAPO's one. So they haven't gotten to a point where they've developed their own policy and processes internally as a standalone entity on how consequence management is going to be handled by the entity. So as a result, we could not confirm how they've dealt with, disciplinary steps against officials that have incurred irregular and fruitless expenditure. And then revenue management, they have a large data. Actually, the 98% of their data is made out of SASSA-related revenue that needs to be collected from post office. So they haven't been able to collect. We've then evaluated to see what are the processes that they have internally to try and recover the funds. And what we identified is that from how it's prescribed and how you go about trying to recover revenue that is owed to you, the processes were not always followed adequately. So from a financial health point of view, what we noted is that the entity is actually not doing so well. So they are generating revenue. It's just that the revenue hasn't grown over the years. So they're not in a space where they're creating new products and they're increasing their revenue. However, we've noted that, the last year they suffered a loss, but in the current year they were able to realize a profit of around 320 million. Although when you dive deep and you try and understand what could have created the profits in the current year, you find that it's mostly accounting entries that were moved. So you can sort of see that expenses were not necessarily reduced and revenue was not necessarily increased. So I think that mostly the biggest concern around the financial health of the Postbank is the variation order that I've indicated that it was issued by the Reserve Bank. So the variation order talks about the entity cannot, create new products until they have resolved some of the internal control issues that have been identified by themselves and also raised by ourselves as the Auditor General. So basically that's where the financial health of the entity is sitting. I also just like to note that there's a concerning trend on the cyber incidents that are continuously being identified and noted, that the entity is indeed losing quite a lot of money. And there has been SASSA penalties as well due to failure to fully implement the contract as stipulated. So we're just a bit concerned that the sources of income are now resulting in losses being suffered by the entity. But currently, overall, the entity is sitting in a more positive financial health than the post office. And then irregular expenditure, they are sitting in they've reported 117 million. And this is mostly due to contracts that have been entered into that they haven't followed the prescript as required. So this is resulting in irregular expenditure being reported. And then fruitless and wasteful expenditure, if you compare to most entities, they've reported 5.9, which is lower than the irregular expenditure by far. And then material irregularities, we've identified material irregularities when we were evaluating the entity. Most of them relate to the SASSA distribution process. So the one that we've raised and we noted key concern is how the entity is managing their SASSA cards. So the SASSA cards management process is so flawed that a lot of those cards are being easily stolen or easily manipulated. And the other issue was, you probably might have heard a few years ago, there was the issue of the issuer master key that got exposed. So these are the very same cards. So that the exposure of that issuer MasterCard meant that, you know, the cards are now easily vulnerable to fraud being committed. So there was a directive that came through from the Reserve Bank where they requested that because these cards are compromised, the entity needs to replace all those cards, which has not taken place. And the indication that we receive from management is that they have built controls around the card management process in order to limit the fraud that can easily take place. So what we did is that we identified this material irregularity. As you can see that it's also closely linked to the one that we've raised on SAPO, which ultimately results in financial losses, and the financial losses are all being suffered within the SASSA distribution process. So the further action that we are planning to take is we are going to also recommend the 2 material irregularities that we've identified, so that all the SASSA related issues are being investigated by the same entity and at the same time. And then the next paragraph talks about the status of the internal controls. So without going through the details, you can see that we have rated almost all the drivers of the internal controls, not almost all of them, as intervention is required. And the assurance providers, also just on a high level, you can see that the only sort of assurance that we are sort of not getting is from the executive authorities. For similar reasons, we have noted that some of the concerns that we've raised were actions were being taken by her, and some of the recommendations that we've provided have been implemented. Some of them have been implemented. Also just to note that the entity remains with a lot of capacity issues, more especially at the board level, audit committee level, and also majority of the senior management are acting. So that poses quite a lot of problems in terms of ensuring that some of our recommendations are being implemented, or the plans that they have themselves internally are seen through and implemented. Right at the end, we also have recommendations. So the recommendations mostly sit around the issues that we've identified when we did the intensified assessment on the cyber incident that took place in October 2021, where we saw an amount that was reported in the media of 89 million that was stolen from the entity. So when we did the evaluation, we saw that there's a need for key IT vacant positions to be filled. And this will ensure that internally management is able to respond to some of the risks and without having to rely on an external service provider. So we've also requested that management must also just make a detailed assessment of conduct an effective independent security reviews and audits on key suppliers supporting the critical Postbank systems. They must ensure that they implement adequate controls around the joiners, the movers, and the leavers to ensure that the correct roles and appropriate access rights are assigned to individuals. So what we were noting is that you'll find that in some of the fraud that is taking place, there are individuals that internally are able to allocate certain roles that are being played by valid internal officials, such as issuing a card, unblocking a card, or increasing the payment limit, which is one of the processes that they were using to take advantage and fraudulently withdraw funds. So they must strengthen security controls around their user access management, their change management, and also ensuring that there are trails that are being kept. When we did the intensified audit on the incident that took place, one of the key things that we noted was that it was easy for whoever that have committed to hide their trail, because one, you find in some instances that information is not kept, there's no audit trail, or two, they will make the changes and then after making the changes, then delete the audit trail. So it was a concern that you also have a banking system that is unable to keep track of all those movements and be able to notify management accordingly. And also implementing controls around monitoring the server activities, where we noted that activities are taking place and it takes longer for management to be able to identify. And that's how the estimated 89 million was withdrawn over the years. I'm sorry, over a couple of days without the entity being able to respond accordingly and identify and note this. So if it wasn't for the reported case that took place on the 28th of October, we are unsure of how much could have been stolen from Postbank, or whether the internal processes that are currently in place would have been able to identify and see that there are activities, unauthorized activities that are taking place. There's also a request that there must be effective controls to ensure that there's robust and regular critical patching. Implementing of multi-factor authorization, ensure that structural processes and practices implemented for the governance of IT and ensure a sound IT environment that is supported by a sound IT infrastructure. So basically the last part is what we are requesting from the committee. So basically ensuring that the plan that the entity is in place is being followed through and implemented, where accountability needs to be implemented. The committee ensures that that is done, and we the accounting authority is also able to this monitoring as well, to ensure that the key vacancies that are in place are being filled, so that the internal controls weaknesses that are being identified are able to be actioned as required. I think I will just leave it here for now, and I'll take questions. Thanks.
Okay, thank you, AG. Right, questions? Going once, going twice.
And my hand's up, Mr. Chairman.
Oh, I thought it was the historic hand, Mazambane. All right, proceed.
Thank you, Mr. Chairman. Yeah, and thank you to the AG. A real horror, another horror story, I'm afraid it sounds like. Sure, it just where does one start? But I think the issue really is trying to establish whether there's room for a similar situation to develop here as developed in VBS Bank, given the large numbers of relatively poor people who use the bank. But so if this huge amount of money could be stolen within a few days, AG, do we know whether there's more money that's been stolen and is just not accounted for and no one knows about it, if the systems are so bad? Is that question. And then with regard to it being a bank, I mean, it's your first bank you're auditing, I think, if I'm correct. Are you able to deal with the stringent requirements of the Reserve Bank? You say you work with the Reserve Bank, and that's great. But what kind of relationship do you have with the Reserve Bank? Thanks.
AG responses.
Okay, thank you, Chair. Thank you, Honourable Chair. Thank you, Honourable Members. Thank you for the presentation. Yeah, also quite a bit of a detailed one, Honourable Chair, but we do appreciate the indulgence, especially given the fact that it was also the first time that we're briefing on the institution as well, and therefore quite a bit of history and context that's required to understand the magnitude of issues. So, yeah, so just a quick couple of responses on the latter part of the questions that were asked, Honourable Chair, by the Honourable Member. Yeah, the one about more money being stolen. So, Honourable Chair and Honourable Members, we actually worked very closely with the new acting CEO, who was seconded from another institution to the Postbank around about, I think, in the beginning of the financial year, April and March or so, and also with the Minister in setting up what I will refer to as an intensified information systems audit on the process as soon as we became aware of the magnitude of some of these gaps. So Joyce would have reported that we have been reporting some of these gaps, but they were always purported to have been system issues and no real risk attached to them, even though you know, the incidents of a couple of years ago it had already materialized, and on the strength of that. Of that particular incident, we had been reporting some material gaps and concerns, and also a simple thing like, for example, a material lack of a reconciliation that was not done between the system that we use and the overarching system that the banking society usually uses, which we always reported to management is the genesis or the source, the true source of all the transactions that would allow us to understand how much money has flowed and what should be reconciled in that regard. And that wasn't always done, as Joyce reported. And on that basis, we then disclaimed, but we then said, well, we can't just disclaim and walk away. There are indicators that something might be happening that's a little bit deeper and therefore requiring a bit more intensive audit focus. And that's what we did, Honourable Chair and Honourable Members, in the current financial cycle. We duly gave management and the executive authority and the board feedback on the outcome of that particular process. The outcome of that process does indicate that there could be potentially additional funds that have been taken from the process, but the minister has also commissioned a full-on investigation, and then they've also implemented some short-term stopgap measures that we have recommended post the audit, because obviously we had to sign off the audit on the 31st of July, but our intervention went all the way up until the 31st of August, just to make sure that we did it justice. So from that point of view, there is a forensic investigation that's been commissioned by the institution, and we have also done a little bit more in-depth work over and above just the normal reconciliation and saying we are limited in this regard, and we have given the minister a full briefing. So at any given point in time, when she's done, then we can come in and then also maybe engage oversight in a little bit more detail with regard to that specific intervention, what we have found and how management is actually responding to it. I think it will actually be nice because they would have had a couple of months now to go and implement all the remedial actions, or at least commence some processes for rectification. So they would also be in a position where one would be able to determine whether they've done any form of, the status of any form of implementation. So you'll get a truer sense of are they really taking the messages seriously, because they would have had at least some opportunity to implement. And then, there was a comment that was made. I'd like to give Honourable Member, through you, Honourable Chairperson, the assurance that based on what I've explained now in the process that we followed on the intensified audit process, on the backdrop of all these gaps that were reported, that we really do invest in some skills in the Office of the AG to make sure that we deal with these institutions. Honourable Chair, Honourable Members would recall that we do have the Land Bank, that we do the Development Bank of South Africa, that we still audit from the Office of the AG. We have all those institutions. Even Itala Bank, that's also done in KZN. So we really do try and make sure that from our mandate point of view, that we have adequate resources and skills in order to be able to execute the responsibilities and the task at hand, but also add value to the system by elevating and highlighting all these significant gaps that we prevent similar recurrence of similar instances such as the VBS Bank. Like I said, I think there'll be greater context provided to the committee members if we were then able to engage on specifically the outcome of that intensified information systems audit that we undertook during the previous cycle. I think that'll also give some context to the members as to exactly what we found and the level of effort that we then provided and assigned to the audit in the current financial year. I think that takes care of the main issues, Honorable Chair. Thank you, Honorable Members, Honorable Chair.
All right, are you good with those responses, Honorable Liz?
Thanks, Mr. Chairman. It's yeah, I mean the AG is obviously doing the best they can, but they can't guarantee anything at this stage. The investigations are still taking place, and so yeah, we await further briefing. Thank you, Mr. Chairman.
All right, thanks, AG. The next one.
Honorable Chair, we will now hand over to Madi.
Okay, perfect. Thanks, Andres, and Madi, over to you.
Thank you, Honorable Chair, and morning again to the honorable members. I'm going to be presenting with Mudiei on the outcomes of Transnet. I think, Chair, maybe to start off with what we're seeing as we're presenting to you the audit outcomes of Transnet. Is that if you look at the outcomes when compared to the prior year, we have seen an improvement in the audit outcome from a qualified audit opinion to unqualified with findings on compliance with legislation. Having said that, Chair, I think it's important to also provide context as it relates to the improvement in the audit outcome, in that Transnet has actually received an exemption from the Minister of Finance in terms of Section 55(2)(b) of the PFMA. And that exemption then indicates that they are allowed for a period of 3 years not to disclose any irregular expenditure and fruitless and wasteful expenditure that arises from non-compliance with legislation. So you would have seen, Chair, in the presentation that when we then reflect on the irregular expenditure and fruitless and wasteful expenditure, you would see a significant reduction in those numbers. The context around that is with regards to this exemptions that is with result to the exemption that I've just spoken about, in that the irregular expenditure resulting from multi-year contracts and from the more recent contracts is not disclosed in the financial statements, but rather disclosed in the annual report. Now, further to this exemption, the context of granting this exemption was really to afford Transnet an opportunity to address its internal control environment and ensure that they put in the necessary controls in place that would allow the entity to be able to identify and report on irregular expenditure and fruitless and wasteful expenditure in an accurate manner. Chair, as we reflect on this audit outcomes, I think it's important that we do understand that context. I think secondly, Chair, when we are doing the presentation today, one of the core things that we would also like to discuss with the committee is the fact that a functioning Transnet results in lower cost of doing business. And as we look at the achievement of key performance indicators relating to the core mandate, we're currently seeing that that performance for the current year is sitting at an average of 39% for the current year. It is important that the operational challenges and the financial challenges that this entity is dealing with then get addressed. We will reflect in the presentation some of the key contributors to the challenges that they're facing in terms of achieving on this core mandate or key performance indicators. Chair, maybe with that, as a way of introducing the document, DA is going to be taking us in more detail in terms of the presentation. And I would then like to hand over to her to take the members through the feedback on Transnet. Thank you, Chair.
Thank you, Madi. Thank you, Madi, and good afternoon, Chair and members, and good afternoon to our AGSA colleagues. Chair, as Madi has indicated, the audit outcomes of Transnet improved when compared to the previous 4 years, where there was a qualification specifically on irregular expenditure. If you look at page 4, the irregular expenditure had been a problem at Transnet, and it resulted in qualified audit opinion. And you look at compliance, areas of compliance with legislation. Under the compliance, Transnet struggled with the errors that we identified in the financial statements, with then was reported as a significant or material finding in the financial statements. And you would see that happened in the current year, 2022, as well as in the previous year, 2020. And when it comes to the expenditure management, which is about the accounting authority not being able to prevent the irregular expenditure that is incurred, you would see there also that non-compliance happened for the whole 5 years that we reported from 2017 up to 2022, that significant finding was reported. And then you look at procurement with contract management. It is the area that Transnet struggled, and even in the current year when they had exemption, we had instances where we identified irregular expenditure from the audit process. And consequence management is another area that we see that in the past 3 years has been reported as a material finding, and mainly because of the investigation processes that are delayed, but I'll unpack it in the next pages. And if you look at the performance information chair in the current year, you see that there's no tick because we didn't report any material findings when it comes to the usefulness and reliability of information, and that happened in the last 3 years. But as Madi put context to that one, what is concerning is Transnet inability to achieve the targets that it had set for itself. Moving on to the audit outcomes, the next page, page 5. So we have already spoken about the exemption to allow Transnet to implement the internal control measures to ensure accurate and complete reporting after 3 years when the exemption lapses. So in terms of this exemption, Chairperson, Transnet discloses irregular expenditure in the integrated report or annual report as opposed to the financial statements. And from the audit side, what we did was apply the agreed upon procedures to audit this disclosure in the annual report in terms of the international standard on related services. So there's a separate report relating to that audit that we issued to Transnet Accounting Authority. There we then reported our observations or the findings, and we identified additional irregular expenditure to what Transnet disclosed in the annual report. So we recommended there that management goes back to the population of the expenditure, investigate and identify undisclosed irregular expenditure so that when Transnet report irregular expenditure is complete and as well as accurate. So basically, Chairperson, had it not been for this exemption, Transnet would have been qualified in the current year. Moving on to the performance information. So Transnet submitted performance reports that contained material errors. So those material errors included the inconsistencies between shareholder compact as well as the performance report. But management was able to correct those internal control deficiencies or the material errors that we identified. And what we did then, we didn't report material findings in as far as usefulness of performance information is concerned, as well as reliability of performance information. That is why then there are no ticks in the previous page table that I was talking to just now. And what is of concern, as Mari indicated, is the targets that Transnet was not able to achieve, even if we didn't report material findings on performance information. So on the two performance areas or programs that we selected for audit, it was about 37% that was not achieved of the targets that were planned. But when you look at all the targets that were planned, it was about 39% that Transnet achieved. And in terms of quality of financial statements that were submitted for audit, that as well contained material errors in the areas of investment properties, fair value adjustments, as well as related parties and commitments. And that was mainly really due to the inadequate review by management. The information that was requested for audit or the record management system is also not up to standard. And another thing was that the valuation of investment properties happened quite late in the year, and that was putting pressure in the system, and there were errors that we identified during the audit, but management was able to correct those errors, which is why the opinion was unqualified. So when we looked at the internal control environment compared to the previous year, there was no improvement, and we recommended there that the action plan be enhanced to ensure that it addresses the root causes so that we don't keep on reporting the material errors or Transnet rely on auditors to identify the material errors and make adjustments. One of the things that we recommended was that internal audit should support the audit committee by reviewing these action plans, first of all for root causes and monitoring, but also to review the financial statements that are submitted for audit and maybe identify the errors, make corrections before that information is submitted for audit. So that was on the financial statements. And we also had findings on in the IT space where the information technology governance practices and structures were not approved at year end by board. We recommended that board approves that governance frameworks and management implemented consistently throughout the year. Another finding in the IT space was that there was lack of adequate controls in the application systems that serve as a source of transactions for financial reporting. And what is happening then is we saw increase in manual interventions by management, which is prone to errors. And we recommended that management reviews the design and determine if the improvement is needed in this space or not, and put necessary measures in place. In terms of governance and stability, Transnet has fully constituted board, and the key positions at the executive level have been filled. So that one is positive because the stability at board level and executive level. But what happened during the year was that as part of the restructuring, Transnet offered the voluntary service severance package to the employees, and number of critical positions or staff members in critical positions took up this offer, which then in some of the divisions created issues where extensive employees with extensive knowledge in the public entity as well as in the financial reporting space took up the offer. So this then created a situation where there was a deterioration in the monthly and yearly processing and reconciliation controls. We recommended that for those employees that will still take up the offer, Transnet develop and establish a clear succession plan to be able to do a proper handover, and for the employees who will take the offer to do proper skills transfer. And moving on to the next page is just a table showing that at executive level, there's stability there and the positions are filled. And when you look at the compliance area, it was not only compliance with procurement and contract management, like I indicated before, there was issues with expenditure management, consequence management, and errors in the financial statement. The biggest issue there was with this contract and procurement, where the preventative and detection controls over procurement and contract management remain inadequate as compared to the previous year, as well as monitoring of the processes regarding the investigations and follow through of the outcomes of the investigations for consequence management. They were slow. And also the action plan was then found to be ineffective because of these issues that we were reporting. And we recommended there as well that the accounting authority just enhances the action plan so that it addresses the root causes as well as the internal control deficiencies. And there as well, we're recommending that, again, the internal audit must play a role of just supporting the audit committee in the space of implementation and monitoring of action plan. We have already spoken about the exemption. There is just chairperson that Transnet should use the opportunity that the minister has granted these 3 years to clean up the internal control environment to make sure that when this 3 years lapses, then the environment will be in such a way that Transnet is able to produce accurate and complete disclosure of irregular expenditure. When it comes to the consequence management on the bottom of page 9, adequate action was not taken against the officials who contravene the supply chain management prescripts, resulting in continued non-compliance and irregular expenditure. And our concern there is that failure to implement consequence management encourages a culture where the disregard for legislation, policies, and procedures will thrive. And moving on to the next page, it is the table with the details of the material findings that I've been talking about, the financial statements, expenditure management, consequence management, as well as procurement and contract management. We have also outlined the root causes as well as the recommendations that have been talking about, such as inadequate review of reports and schedules when it comes to the financial information that is submitted for audit, as well as poor record management system. And we recommended, like I said there, that internal audit plays a role of supporting the audit committee in terms of the independent review processes. And with expenditure management, the root cause there was that inadequate processes were in place to identify and report irregular expenditure. And this talks to even the exemption that was granted to allow Transnet to do a cleanup in the control environment in that regard. We reported quite a number of findings in the audit report, about 10, regarding procurement and contract management. And about 3 of them, it was because information that was submitted for audit was not sufficient and appropriate. So it still talks to the record management system. And we recommended, there that Transnet implement reliable documentation system to ensure that information is easily retrievable when required, and that officials who disregard procurement with legislation, procurement prescripts are held accountable through consequence management. Chairperson, I'll move over to financial viability. We just want to comment Transnet, it is able to raise funds without much government support. So Transnet is able to raise funds independently of government. However, the issues of liquidity and financial health of Transnet require close monitoring and attention. You would have seen in the annual report and financial statements, Chairperson, that Transnet reported 5 billion profit. It was mainly driven by fair value adjustment on investment properties, which amounted to 9.8 billion. So this was even that process that I was talking about, where we identified errors, and it was done quite late in the process. It was extensive exercise, that one. So the issue then is still that Transnet is not able to generate sufficient cash flows from operations to settle loan repayments. I've spoken about the profit, that it was because of fair value adjustment. When you look at whether Transnet is able to generate cash from operations, there was a concern there. So, and it is not sustainable that the loan repayments are made from raising loans, because for Transnet to repay, it raises loans, and it is able to do that because Transnet has facilities available in the form of the domestic medium-term note. That one has about 36 billion available, and when you look at global medium-term note, it has about $5 billion US dollars available for Transnet to raise funds when it requires to do so. But what is of concern then will still remain the liquidity profile of Transnet, and that is what Moody's has also raised. So Transnet has to pay attention to the operational challenges that it faces so that it can generate cash and be able to settle loans from the operational reserves or profits. When it comes to performance information, Chairperson, like what Madi said, Transnet is a critical player in the rail transport environment, and the mandate is properly aligned to the MTSF priorities. The challenge was the achievement of targets, because Transnet planned, but it was not able to achieve. Like we said, when we look at 5-year period, on average, Transnet was able to achieve 40% of the targets that it had set for itself. The highest one was 60% in 2018, and the lowest was in 2021, and that one was because of COVID, the impact of COVID. And even when you look at the overall financial performance before 2020, it was steady in the 3 years before 2021 at 33 billion the earnings. But when you look at the impact of COVID, it was clear that Transnet was negatively impacted. And we saw the decline in the revenue and ultimately net loss in 2021. And when we unpacked the reason of Transnet not being able to achieve on the targets, it was really top 3 of them. There were other reasons, but top 3 of them was the availability of rolling stock, the infrastructure maintenance, as well as the security issues. And on page 16, we're sharing with you those indicators that Transnet had planned and the achievements, so that you can see for yourself the reasons behind the non-achievement of targets, and that most of the targets were in the red. And when you look at the infrastructure project or availability of rolling stock, being the main reason for non-achievement of targets or poor performance. So in 2014, Transnet signed a locomotive supply agreement with 4 manufacturers, and that contract, which was key for performance of Transnet, was put on hold because of the irregularities. So this contract, when it was put on hold, there were some locomotives that were still outstanding for delivery. In addition to that, some of the manufacturers were supposed to deliver or provide spares to Transnet to do maintenance. So putting that contract on hold affected Transnet from moving the locomotives from one point to another, or volumes from one point to another, such as inland to the ports. So that is the main reason. And if that one is sorted, we will then start seeing improvement, or we should start seeing improvement in the performance of Transnet. And when it comes to maintenance, you know, the budget, maintenance budget decreased over the past 4 years, resulting in backlog of infrastructure maintenance. And the main reason for the decrease is going back to the reduction in volumes. When you link it back to availability of rolling stocks, it impacts the volumes that are transported, it impacts the revenue. And if it impacts the revenue, then Transnet won't be able to generate sufficient cash to do maintenance. So it is sort of linked, this one. And the other one was the issue of security is another serious issue, as the security incidents have been increasing over the past 4 years, resulting in Transnet not being able to utilize the available slots to move volumes. So what Transnet has done in this regard, it had revised the security plan to take into account the initiatives where it would then partner with customers and partner with state organs, and also revise the security contracts to be outcome-based. So these are the 3 initiatives that Transnet you know, has put in place just to address the security challenges. And when we looked at the impact of Transnet not being able to move volumes, in 5.3 chairperson, the number of mines could not move their commodities to the ports, and compromising economic growth and job creation. So those are the real, you know, experiences on the ground that the impact of not being able to move volumes has. And one of the things is that the increased number of trucks moving goods on the roads damage the infrastructure network, and that then result in the increased cost to maintain these roads. And these funds could have been used for other service delivery, you know, critical social services. The security incidents and additional funds that are required to repair vandalized infrastructure rob the country of much needed economic growth. And the unavailability of rail infrastructure result in an increased cost of doing business, and that cost of doing business is passed on then to the ordinary citizens, increasing burden on the state as well. So those are the impact of Transnet not being able to move volumes. It has quite impact on ordinary citizens in the country, as well as businesses. Transnet, you know, overall mandate is to lower the cost of doing business in the country by operating effectively and efficiently. We encourage Transnet to seek a sustainable solution to unavailability of rolling stock and related maintenance. And when you look at the irregular expenditure, you will see over the past 5 years, it was up and down, but you'd remember, Chairperson, when we started in the beginning, there was qualification over the past 5 years because of this irregular expenditure that was not complete and accurate. And in 2022, you see that decrease that Madi was talking about, it's only 1 billion because of the multi-year contracts that are not included in this balance, and the opening balances that didn't form part of this balance. So this balance is essentially not complete. We issued material irregularities in the previous audit, the 2. In the current year that we signed off, 2022, we followed up on the progress, and indeed the accounting authority acted on our recommendations. There was forensic investigations, the forensic investigations that were done, and the employees or officials that were implicated have been notified, and the disciplinary proceedings are underway. We note that yes, the process has taken long, looking at when the notification was issued in August 2021, but we also spoke about the consequence management, the delays relating to the consequence management processes. And when it comes to the internal control environment, we reported these deficiencies to the accounting authority. You'll see them in the audit report, Chairperson. And one of them, the first one, and it's very critical, that inadequate oversight of financial reporting, compliance, and related internal controls to ensure that compliance requirements are met in order to prevent irregular and fruitless and wasteful expenditure. So that has to be addressed. We've spoken about the challenges with record management systems. It happened in the financial statement area. It happened with compliance as well as the procurement and contract management. Effective systems of internal controls were not implemented to ensure accurate financial information, especially at the divisional levels, where then this information is required to be consolidated at group, but if it has errors, it created problems. So attention should be focused on those divisions that experience challenges. We have also spoken about the challenges with ineffective action plans and recommended that the accounting authority put measures in place to enhance the action plans to identify correctly the root causes, and the implementation should be closely monitored. The performance information we reported, the errors that we identified there, the inadequate reviews, the IT internal control deficiencies that I've spoken about earlier. And we have made recommendations to the accounting authority, really, that the accounting authority should strengthen the preventative controls to ensure that compliance with legislation, to make sure that control environment matures by the time the exemption expires. And we recommended that the accounting authority must work with audit committee to ensure that management implements and enhances processes to review the financial statements. We've also made recommendations about the action plans. I've spoken to that one. And the most important one, Chairperson, is the last one, where we recommend that the accounting authority should continue to implement and monitor initiatives in place to improve the performance, because performance is an issue, such as progress made on the agreements with those manufacturers of rolling stock and the maintenance and security of infrastructure. And for the committee, we're recommending that you then follow up on the progress made on action plans to address the financial and operational challenges affecting performance and delivery of core mandate of Transnet. And the internal control environment relating to compliance with legislation, that one is very important because of that exemption. The issue of OEMs as well, Chairperson, we recommend that the committee monitor programs, progress to resolve the challenges with these manufacturers, that whatever initiatives that are put in place are materializing and are sustainable. Chairperson, that is the end of our presentation on Transnet.
All right, thank you very much. Colleagues, any questions? All right. Yeah, the headaches are just unabating, actually. All right, let's move on, colleagues. AG, you can carry on. I think that was fundamentally and loudly clear for members. All right, let's carry on.
Loud and clear, Chair. We can't wait to deal with the affected executive authorities and accounting authorities, but the AG was very loud and clear. Okay. All right, AG, next one.
Thank you, Chair. I think that's it from us at Transnet. I'll now hand over to Nompakamo for Prasa. Thank you.
Thank you so much, Madi. Good afternoon again, honorable members and chairperson. Ilza will be the one who's going to be taking us to the detailed presentation. However, before he can start, I just want to take first of all the opportunity to appreciate the support that we as Auditor General has received from the Minister as well as the Prasa board in ensuring that we conclude this audit on time and today be able to brief the committee on the audit outcomes. It is very commendable, honorable members, as it allows now the timeless accountability process to take place. So honorable members, if you can see on our documentation of our document, the overall audit outcomes of Prasa remain the same as prior year, which is a disclaimer with findings. We've seen some signs of improvement in terms of addressing some of the areas of concerns. However, they were unable to address all the significant matters. Hence, it's still a disclaimer with the opinion. Compliance with laws and regulation is still in our area of concern, and Ilza will provide more detail around this. Honorable members as well, you will note that we have elevated some of our key messages on the service delivery in our briefing document, and this is actually consistent with our culture shift strategy, where we aim to have a stronger, more direct and consistent impact on improving the lived realities of ordinary South Africans through our insights of cause and influence and enforce. So you note that Prasa actually did not achieve most of the key fundamental performance indicators, which is very, very, very concerning because it had a very negative impact on the lived experiences of our citizens. So we did recommend some of the key areas that they can work on in terms of their comprehensive turnaround strategy, and most importantly, filling off their key executive management positions on a permanent basis. So I will now allow Ilza to take us through the presentation, and then we can take the questions and comments thereafter. Thank you, Sean.
Okay, that's fine, thank you.
Thank you very much, Nompakamo, and good afternoon, Honourable Chair and Honourable Members. I think the committee is quite familiar with the matters of Prasa, so I'm going to try to be brief. I do see that the time is running out. So when we start off with the document, let me just make my screen a bit bigger. With regards to the organizational structure, I think we're all familiar with the Prasa group, which then constitutes Prasa as an entity, which includes the three main divisions, Prasa, Tech, Rail, and Crest, as well as the two subsidiaries, wholly owned subsidiaries of Prasa Autopacks, that's then responsible for bus transport. Yeah, I think there's somebody
an echo somewhere. Yeah, if we can Ben, assist.
It's not me, Chair. It's not me.
The problem, Chair, is on my side, Chair. The problem is on my side. I keep hopping between my screen and my phone. My network is very unstable.
Okay, fair enough. All right. Sure, carry on. Sorry about that.
Thank you very much, Honourable Chairperson. I was saying that then there are the two wholly owned subsidiaries of Prasa, which is Autopacks, that's responsible for the bus transport services, as well as Intersite, which then deals with Prasa's secondary mandate of the exploitation of assets through, for example, the earning of rental income and leasing income when properties are developed and tenants are then accommodated in those entities to then generate a rental income. With regards to funding, we would see that during the year under review, Prasa received about 16.6 billion rand in subsidies from the Department of Transport, of which 6.9 billion was for operations and 9.7 billion for capital expenditure. And then if we look at the actually internally generated revenue of Prasa, we're sitting at about 2 billion, but about 1 billion of that was interest received on the capital expenditure, which was obviously the grants that was banked, that's not yet spent, that constitutes the biggest portion of that 2 billion. And then if we look at the fair revenue that was generated by the group, which in essence should be the income driver for the Prasa group, was sitting at more or less 343 million for the year under review. So overall, a bit of a concerning picture. As we know, Prasa struggled during 21-22 still to recover the critical infrastructure that would be necessary then to ultimately up these figures of
Sorry, Chairperson.
Yes.
Yes, I think Ilse is not sharing the screen. Can I just ask her to share the screen, please? Okay.
All right, Ilse, please share.
Apologies, Nicholas, for that. If you could just confirm if you can see it now.
Yes, we can, Chair.
Thank
We can.
Yeah,
Thank you.
yeah, it's up.
Apologies for that, Chairperson. I was under the impression it was shared. Then if
No
we look
worries,
at the audit,
no worries.
thank you. If we look at the audit opinion history of Prasa, so firstly, I think that I want to link on to what Nompakamo said. I know it was a concern of the committee previously, the strained relationship between the Auditor General and Prasa, which has improved significantly during the year under review, which also enabled us to then get the audit done quite a bit faster. So from that perspective, there's some positivity to report. Then furthermore, we would see that despite the fact that Prasa has then addressed 4 of the prior year basis for modification paragraphs, unfortunately, we're still sitting with issues in the property, plant and equipment, the irregular and fruitless and wasteful expenditure, as well as commitments. So if we look at the magnitude of those matters, with property, plant and equipment, we're sitting with about 77% of Prasa's total assets at 43 billion. So with regards to the property, plant and equipment, the situation has remained largely unchanged, where we still have significant internal control deficiencies in the asset management processes. Prasa was unable to then hand in adequate supporting evidence, which included accounting records for audit purposes, and wasn't unable to then submit sufficient appropriate audit evidence for us to express an opinion as to whether these assets are fairly presented. In addition to that, Prasa did not conduct the review of the residual values and the useful lives of property, plants and equipment as required by the accounting framework. And we were also unable to get evidence that they've done a comprehensive impairment assessment. So that then remains an issue with regards to property, plant and equipment. With regards to irregular and fruitless and wasteful expenditure, Prasa has historically and continues to be qualified on the completeness of irregular and fruitless and wasteful expenditure, and that is mainly because the group did not have adequate systems for identifying and then disclosing all such expenditure. And we didn't have appropriate alternative procedures to then perform to determine whether these balances are completely reported. With regards to commitments, which is also sitting at a very material amount of 139 billion, the group did not have then an adequate system then to, calculate and show the assumptions that was used by management in calculating these commitments. They were unable to present evidence in support thereof so that we could determine whether it was reasonable and justifiable, given then the non-submission of sufficient appropriate audit evidence. Then with regards to the report on predetermined objectives, similar to Transnet, we did not have material findings just in respect of the usefulness and the reliability of Prasa's reporting of their achievement of predetermined objectives. And to that extent, however, like Nompakoma has mentioned, we are quite concerned about the level of performance, where about 81% of the key indicators and targets were not achieved for the year under review. The status of the audit of compliance. So we see here that none of the material matters that we reported in the prior period has actually been addressed. And we again saw material non-compliance coming through in the area of misstatements of submitted financial statements. That was mainly because of the fact that the financial statements were not submitted within the legislative deadline. It was submitted late in contravention with the PFMA, as well as the fact that there were material misstatements in these submitted financial statements. Then with regards to procurement and contract management, we did see a minor improvement there in terms of the reduction of the number of findings on procurement and contract management. But with that being said, we must take note of the fact that the level of procurement in 21-22 was significantly lower than in previous years, and that was mainly due to failed procurement strategies, which was then exacerbated by staff shortages in the supply chain management department. Additionally, Prasa then simultaneously need to rebuild a lot of lines across all engineering disciplines, with the result that overloaded the procurement processes and resulted in some protracted procurement processes. We have noted some movement on these non-achieved targets post-year end, but that obviously has not been subjected to the audit process as yet, as that will form part of our next year's audit process. Then with regards to expenditure management, that mainly speaks to Prasa not having prevented irregular and fruitless and wasteful expenditure, which we'll deal with later on in the presentation. And then with regards to consequence management, we were unfortunately again unable to get a sufficient appropriate audit evidence that Prasa has investigated as required by the PFMA all instances of fruitless and wasteful and irregular expenditure as previously reported, which then resulted in us not having been able to confirm that they've applied disciplinary processes if such were necessary emanating from the investigation. Chair, please, I'm going through this quite quickly as I've dealt with a lot of this background whilst I was presenting the first part. So perhaps just to highlight then that we did emphasize to Prasa that there's a need for them to compile and implement a comprehensive turnaround plan. We've noted that Prasa do have a couple of plans in place throughout the organization, which then deals with how matters are going to be improved, but we did emphasize the need to then consolidate those, which would also then enable the proper monitoring and tracking thereof. And the main areas that we indicated that this should include is to create stability at executive management level, which I'll deal with in a bit more detail coming up, fully capacitating critical units, including finance, supply chain, and contract management, as well as the internal audit and asset unit, and then effective and efficient procurement, as well as fast tracking the depot and infrastructure recovery and modernization. Chair, if I move on to governance and oversight, so what we've seen during the year under review is that Prasa's board has in effect been stable. However, at executive management level, the situation is not quite at that level, and we still see the majority of executive management level being acting positions. As you'll see on the screen, there's in essence 12 executive positions, of only which 3 of those were filled permanently. 1 was vacant, being the company secretary, and the remaining 8 positions, which importantly includes the group CEO and group chief financial officer, was filled by acting incumbents during the 21-22 financial year. This is a matter that we already indicated requires intervention in the prior year. However, the situation did remain unchanged, which is problematic because as the board are formulating plans to turn the entity around, we do see that the instability at the executive management level and the capacity shortages are then having a detrimental impact in the actual execution of those plans. Then we just further noted that in certain instances, Prasa, as I've shown on the first slide, do consist of various divisions, the 3 main divisions, which we've noted that sometimes function in isolation and that the lack of coherence in terms of the various divisions then also contributed negatively towards the collective accountability towards the entity as a whole, and that consequently also emphasizes the need for the cohesive and stable leadership from executive management. And therefore, we also indicated that Prasa and the board specifically needs to then make sure that the executive management level is stabilized. Then with regards to the quality of submitted annual financial statements, what we've noted, as I've already mentioned, is that Prasa did hand in their financial statements late, only on the 30th of June, and that was attributable to the late finalization of the asset verification process. What we've also seen is that the units that are responsible for submission of the inputs that needs to feed into these financial statements did not submit their information in a timely manner. Furthermore, the preparation of Prasa Group's financial statements, which is large and complex, really hinged on one individual, which was the manager in finance and reporting. So ordinarily, one would expect that there would be a team of people working on a set of financial statements this big, but due to significant capacity constraints in the finance unit, also relating to the skills that are available, this one person was then mainly responsible for that. As a result then of this late submission, there was no comprehensive review of these financial statements, which we would expect would include the verification of supporting records, schedules, and registers could not take place. Internal audit also did not review the financial statements prior to submission because internal audit is severely undercapacitated, and the other governance structures was hampered by time constraints in terms of their submission. So what we've recommended to Prasa is that they should already now start preparing for the following year's annual financial statement submission to ensure that there would then be appropriate time to appropriately review these financial statements before submission. So Prasa has already handed in an action plan to us for comments, which we are currently looking at. We've also committed in the upcoming year, seeing as though the audit was concluded a bit earlier, that we are looking into performing an interim audit so that we can timeously identify any issues that will emanate at year end if they are not addressed. Expenditure management, I think I am going to deal with in detail when we get to the sections that relates to fruitless and wasteful expenditure. Then with regards to consequence management, so we have noted an improved commitment in the 21-22 financial year in terms of Prasa taking a bit more of a zero tolerance stance against transgressors of laws and regulations, but those were mainly limited to very particular matters, which included our previously raised material irregularities. And then that would also then result in one of the main material irregularities pertaining to the locomotive matter having been appropriately addressed in the year under review. Then we've also seen that there are a couple of people that are undergoing disciplinary matters, however noted that some of them were on quite long suspensions. So we said that that is something Prasa must look into addressing, as these long suspensions then results in capacity, further gaps in the capacity and further overburdens than the already constrained human resource capacity. We also did note to them that as consequence management is being ramped up, it must be done in a manner that doesn't create a culture of fear where officials are then reluctant to make decisions that are required to move the entity forward. Notwithstanding those positive developments, then we noted that Prasa still failed to investigate the everyday occurrences of irregular and fruitless and wasteful expenditure, like I've already noted. And quite importantly, as part of our audit process, we did request a comprehensive listing of all the investigations that are currently ongoing in Prasa, which are quite a lot, and it's being performed by both external and parties and then Prasa internally. However, such a listing could not be provided, so that is then one of our key recommendations that the committee must also consider following up with Prasa, that such a listing is then submitted, because that will enable proper monitoring and tracking of these investigations. And then as it's, disciplinary processes are proposed, that such can also be tracked in a coherent manner. Then just in conclusion, we then say that consequence management is overall then still not at a satisfactory level. With regards to material irregularities, we previously reported 9 material irregularities, and as I've noted before, remedial action was issued relating to the unfair procurement processes of the purchase of locomotives, which then has been resolved as adequate actions were implemented by Prasa during 21-22 to address the remedial action that we propose that they take. What we do, however, importantly note is that we will continue to follow up on the further actions that are to be taken. And should the progress then be considered deficient in future, we do reserve the right to reinstate this material irregularity. With the remaining 8 material irregularities, the investigations have been concluded, and Prasa is in the process of then concluding the disciplinary actions in this regard. And we have noted some good traction in that respect in the year under review. With regards to Prasa subsidiary Autopax, the one that I mentioned is in charge of the execution of the primary mandates relating to long-haul bus services. So Autopax continues to struggle with financial difficulties and persistent going concern issues, and as a result, they were actually placed under business rescue on the 18th of November 2021. The process is still ongoing. The business rescue practitioners at this point have indicated that they are confident that Autopax can continue into the future, but it is hinging on additional funding being secured to then enable the acquisition of a new bus fleet. So the resolution of this funding issue has to still be pursued by the Prasa board with National Treasury, the Minister, and other role players such as the Department of Transport to bring this matter to a close, to move the Autopax subsidiary forward as well. Then, as we've noted, Prasa did not achieve the majority of the targets for the year under review, and if we see here, this is actually the second lowest level of performance that we've seen in the past 6 years. This is mainly attributable, although there were some circumstances beyond Prasa's control, which then was the continued impact of COVID-19, the civil unrest that was encountered in July, as well as the NUMSA strike, and the relocation of informal settlements in the Western Cape, which is not fully within Prasa's control. But the main root cause was then failures on the procurement front that I've highlighted earlier. Then, in terms of the service delivery objectives, similar to Transnet, Prasa is a fundamental role player in the economic recovery plan, forming part of the transport sector. What we have noted is that whilst Prasa's strategy and annual performance plan were aligned to governance priorities as outlined in the MTSF and the NDP, Prasa was behind at the end of 21-22 in terms of these targets relating to the rolling out of the new stock, to various priority corridors, the modernization of the existing rail network and system, as well as the upgrading of the metro rail fleet. And as these targets and achievements thereof are falling behind, this is inevitably will have a negative impact on the lived experience of citizens if there is no rapid turnaround of the situation. With regards to infrastructure, we've noted that Prasa only spent 35% of the capital budget for the year under review, also attributable to delays in procurement processes. Then one of Prasa's big contracts is then the contract with the Gibela Rail Consortium as part of the rolling stock renewal program, which is to deliver 600 new trains, those blue trains of Prasa by 2030. So by June 2022, Prasa had received 105 of these trains. So the train delivery was slightly behind at the end of the financial year, but it has ramped up quite significantly. So in terms of train delivery, there is not such a major concern. However, the problem has now shifted to actually putting these trains into operation. And what we've noted as part of our audit process is that these trains are currently vastly underutilized and then stockpiled at the depots due to Prasa's inability to bring them into operation. And that is mainly as a result of slow infrastructure development to then accommodate these new trains. So once again, emphasizing the need for Prasa to expedite the rail infrastructure in as far as that is possible. Then also an important part of this Gibela contract is the fact that the contract does contain a number of economic development obligations on Gibela, and Prasa was unable to then determine in the 21-22 financial year whether these obligations has been met. So those then relate to employee numbers at Gibela as for indicators such as BBBE and training, the local content procurement, as well as the rand value spending on items such as skills development and economic development contributions in the rail sector. So Prasa is able to level penalties against this contracted party in the event that they do not comply with these requirements, but because Prasa was unable to then verify whether or not these economic development obligations have been met, they were unable to then enforce such penalties if that was necessary. This, we said, was amongst others due to capacity constraints within the project management team. We've noted that for the year under review, the management of this big contract, which then includes the manufacturing and supply agreement, as well as the technical space supply support agreement, the TSSA, really vested in 3 Prasa employees, which Prasa is in the process of addressing. We understand from discussions we've had in the past week, but that is also something that needs urgent attention, as this is a very, very large contract and has critical, like we mentioned, economic development obligations in addition to then manufacturing these new trains. With regards to security, so Prasa's infrastructure, similar to Transnet, is obviously a target for vandalism and theft, and the crime-related incidents at Prasa reached an all-time high in November 2019. So what we've seen subsequent to that is that the security incidents are declining. So we have noted a marked decrease in the reported asset-related crimes. However, vandalism and theft is still occurring and continues to have a negative impact on service delivery. So we are encouraging Prasa then to continue to collaborate with Transnet and the other law enforcement agencies on security management to manage the vandalism of the rail infrastructure whilst they're implementing their security strategy that they adopted in February 2022. As we've noted, unfortunately, this non-achievement of target has a negative impact on the citizens, and in Prasa's case, the inability to then provide adequate, reliable and consistent safe rail commuter services has resulted in increased transport costs for citizens as they take more expensive alternative forms of transport. It's more consuming to get to work as rail travel, especially during peak traveling times, or quicker than traveling by road. It also then impacts negatively on people's ability to easily and affordably access work opportunities. Chair, I'm not going to dwell on the next sections, as I've already covered that whilst I was presenting. I think just on point 7, if any of the members wanted to refer to specifically which targets were not achieved, it is set out in this point 7. The compliance with legislation I've also already dealt with. And then section 9 just contains the details of the material irregularities if somebody wanted to refer to those. Then on section 10, we can see here the status of internal controls, with the majority of them still requiring intervention. And what we've noted as some of the key control deficiencies in our audit report was then the instability in executive management, which we've noted as we were busy going through the presentation. The critical staff shortages, and that then mainly from an audit perspective had an implication. And as far as the finance and the asset management units, the supply chain and contract management, the internal audit, as well as information technology. And this then hampered the effective execution of the financial management, prevention of non-compliance with laws and regulations, as well as then having a negative impact on the execution of Prasa's mandate. We further noted that there wasn't effective monitoring and enforcement of adherence to human resource management policies and procedures, especially in relation to recruitment and appointment of employees, poor procurement planning and failed procurement strategies, like I've highlighted. Significant deficiencies were then also identified in information technology and as well as the record keeping systems of the entity. This then resulted in the information not having been readily accessible and available to support both from an audit perspective, the financial statements, but also critical to internal decision-making at Prasa, where information is required where needed. Then, as we've noted, one of the critical matters that we have suggested to Prasa, which was not there in the prior year, was an effective, comprehensive and effective turnaround strategy, which would then be aimed at resolving the root causes that resulted in the historical poor audit outcomes and performance. Honourable Chair then chooses to highlight the other reports and investigations currently ongoing at Prasa. So perhaps important to note is that these reports and investigations are still in progress and then did not form a part of our opinion on the financial statements. You would note that these first two matters has been ongoing for a very long time, which is the forensic investigation by National Treasury in relation to the Public Protector's report in August 2015, as well as the DCPI that's investigating ongoingly current cases in terms of the PRECA Act. Then during the current year under review, Prasa did institute an investigation into allegations of fictitious or ghost employees. That investigation is still ongoing and we have urged Prasa to expedite such. And we do believe that this investigation is nearing completion. So furthermore, then just what we've noted here is, like I've mentioned before, that it would be important for Prasa to just make sure that they do compile a comprehensive listing of such investigations to enable proper monitoring thereof. Chair, then in terms of irregular, fruitless and wasteful expenditure, just to preface the section, we have qualified Prasa on both the complete reporting of irregular as well as fruitless and wasteful expenditures since 2016. No action was taken in 21-22 to revisit the previously reported expenditure figures, which would be necessary to then resolve this matter. So what we've noted to Prasa is that this will be a very comprehensive exercise and Prasa then needs to determine the practicability of going back that far to identify any instances of irregular and fruitless and wasteful expenditure that they've omitted to disclose. And once they've then done that exercise of determining the practicability, we have recommended that they engage with the National Treasury on any such aspects to then reach concurrence as to how to effectively deal with this matter to then resolve these qualified areas. So with that being said, the figures that you will be seeing on the screen is then what Prasa has disclosed in their financial statements, with the preface, like I said, to say that we have not been able to determine whether these figures are actually complete. So in 21-22, we've seen an increase in the irregular expenditure, as you see reflected here, which has then brought the irregular expenditure balance to a figure of about 29.1 billion rand. Of that, most of the irregular expenditure that was incurred during the year under review was mainly related to issues in the supply chain management area, where there was non-compliance with the prescripts. And the items are listed here: the procurement that was not in line with the SM policy, the purchase of goods and services through the splitting of quotes instead of a tendering process, the competitive bidding methods not being followed, as well as overspending on contracts prior to obtaining approval from appropriately delegated officials. So, Chair, perhaps it's important to also just note that the matters that were disclosed in 21-22 mainly relates to historical contracts, as Prasa has not been adjusting their annual financial statements for irregular expenditure matters that have been identified through the audit process. So none of this 1.1 billion rand that we see here actually emanates from procurement transactions that were undertaken in the 21-22 financial year. And as I've also noted for both of these items, we then was unable to obtain appropriate evidence that these matters have been investigated and dealt with appropriately in line with legislative consequence management prescripts. With regards to fruitless and wasteful expenditure, we've also seen quite a steep rise in the fruitless and wasteful expenditure, and the main reason for that then being the write-off of an amount of 191 million due to that this amount was previously included in the work in progress cost relating to property, plant and equipment or assets. These are historical numbers, and as Prasa was going through the process of trying to then bring this work in progress into capitalized assets, they were unable to then to find any supporting evidence or underlying assets that supported the 191 million, and that is then why this was reported as fruitless and wasteful expenditure by the entity. The remainder of the amount then constituting penalties and interest. So, Honourable Chair, just to conclude on the presentation, the key recommendations that we would want the committee to consider as part of its oversight role then would include the following, which the first one is to follow up with the Prasa board on the development, implementation and monitoring of a comprehensive turnaround plan to improve the audit outcomes and service delivery, the stabilization of executive management, the infrastructure modernization program, in essence, the rebuilding of the Prasa infrastructure, which needs to be urgently fast-tracked to ensure the effective deployment and the utilization of the new trains, to improve service delivery and ultimately to the benefit of the citizens. The capacitation of the project management team that's dealing with the Gabela contract, the financial sustainability of Autopax to get to a resolution in terms of the purchasing of a new bus fleet, the listing of the investigations, as I've mentioned, the development and implementation of the procurement plan, as well as the fact that this plan should then address relevant measures to mitigate project delays due to failed procurement strategies. Process should also be monitored in terms of the steps that they have taken to investigate all reported irregular and fruitless and wasteful expenditure and the implementation of consequence management in respect thereof. And then lastly, that the Prasa board should report on the status of the remaining actions that must be taken to address the material irregularities that we've previously reported. Thank you very much, Honourable Chairperson. That then concludes the presentation for Prasa.
Thanks, AG, for that. Let us get questions from members, if there are any. Colleagues, I've changed devices, so I'll not be in a position to see hands.
So you want us to just speak, Chair?
Yeah, please just shoot. I've changed devices. I'm on a smaller device. I'm unable to see hands. Shoot.
No, thanks, Chair. We welcome the presentation, and I guess a bulk of our issues and areas of concern will be addressed directly with Prasa. But what I find it interesting, the presenter, when dealing with issues of consequence management, she said Prasa should be careful that they don't use consequence management to instill fear in the management. Yet, on the same line, she's saying when it comes to consequence management, not much has been done, and consequence management is not at the required level. What informs that statement? Can I just get a clarity? Were there any observation that they've observed that it could be possible that at some point consequence management is used to instill fear? Because I find that contradictory when on the following line you would say consequence management is not at the required level. And also in relation to the finance unit, where one person is responsible for financial statement, as a result, they were unable to have its financial statement reviewed. What then happens to these quality assurance providers in a form of audit committee and internal audit committee? I just want to get clarity on that one. My apology, when you spoke about records keeping, I got disconnected and I couldn't grasp what exactly is still an issue. Are you saying at this current juncture, record keeping is still a challenge? And what exactly are the issues of extent, or what are these key and critical documents that AG could not access or receive in terms of fulfilling its mandate? I just need clarity, because that's one of the key and critical issues that we raised sharply, I think, with the two previous boards where there were no records keeping. So if this is still ongoing, please share with us the culprits and which unit, department, or section that still is struggling to have a proper record keeping. The last aspect, the trains that are stockpiled and not being used, for how long have these trains been standing for? And how many trains are we talking about? And financially, what impact does that have negatively? Do they, are these trains still in good conditions, or they have been vandalized due to theft and damages to infrastructure? We all know that Prasa is famous of vandalism when it comes to its infrastructure. So are these trains still in good condition? Is Prasa incurring a cost in terms of maintenance, in terms of time spent of other equipments and engines and stuff like that? So I just need to get a clear understanding whether or not that could also amount into fruitless expenditure, having trains standing and not being utilized. My honorable chairperson, that will be all. Just one sec, let me just double check if I've covered all my issues. Okay, now we'll deal with the issues of long okay, the issues of long suspension. How many officials are we talking about? Do you have a sense or an idea? Officials that are placed on long suspension, is it isolated incidences, or is this a serious issue or area of concern that needs our attention, so that we know the extent of the problem as it relates to long suspension? Thank you so much, Chairperson.
All right, thanks, Honorable Hattab. Is there any other hand or follow up? All right, AG, please respond.
Hadebe, and I will leave the questions and then I'll allow my colleagues to also fill in the gaps where I could not respond to some of the questions. One of the questions that you've highlighted is relating to the finance unit capacity constraints, or whether what is the role that has been played by the internal audit as well as the audit committee in terms of the review of the quality of financial statements. I think during the presentation, we've touched a lot on the capacity as well, constraints that are also experienced by the internal audit. So therefore, there was a reason why the quality of the financial statements, there was a lack of in terms of the review. So internal audit themselves, the unit itself, does lack some capacity, has got capacity constraints. And then in terms of the trains that are being stockpiled, there are many, how many trains? There are like 105 trains currently stockpiled, and the value of those trains is 9.8 billion. That's the value of those trains that are currently stockpiled. In terms of the record keeping, the main area that we've seen in our briefing document is pertaining to the property, plant and equipment, as well as the commitment. The record keeping of the documents that we've experienced, was it in line with the assets that are not in the fixed assets register? We could not have some of the documentation in terms of those, as well as the fruitless and wasteful expenditure of the assets that have been written off. We could not have as well the documentation around those assets that were written off. Because of that, we could not have the documentation. And then they were now disclosed the fruitless and wasteful expenditure because of that. And then I'll hand over to Ilse to fill in some of the gaps in terms of the actual number of the officials that are long been in suspension, as well as the conditions of as well of the train, based on our asset verification processes and the consequence management. Hand over to you, Ilse.
Thank you very much, Nompokomo. Thank you, Honourable Chair. I think perhaps just in terms of the trains, so not all of the trains are currently stockpiled. There are some that are being utilised on some of the corridors. But what we noted that as December 2021, there was about 69 of these trains that were available for operational purposes. That was the time at which we looked at these figures, and of these 69 trains, about 67 of them had travelled less than 1,000 kilometres during the month, and only 2 travelled more than 1,000 kilometres during the month. So just in terms of the condition of the train, so the trains, whilst it's not being fully utilised, they are being maintained. So during our audit, we did not raise any key concerns. So the trains are being run, like we say, then, just to keep them operational on the testing tracks, as well as it is being maintained. So we are not concerned from a perspective, although as these depots are getting more and more of these trains in the space, is becoming a problem. So that is a matter that Prasa continuously need to watch. But at present on 21-22, we did not note specific instances, for example, of vandalism and theft, like the Honourable Member mentioned. So the trains then still being in good condition at present. Then with regards to the suspensions of the long suspensions of officials, Honourable Chair, I think probably Prasa would be in a better position to provide accurate figures. It is a very dynamic environment. So we did note a number of these instances. It wasn't just isolated to a single official, but probably the entity will be in a better position to give the committee accurate figures in terms thereof. Just then in terms of the consequence management, like we've mentioned, the culture of fear really pertains to, like we said, there are key and critical specific matters that Prasa has been investigating quite rigorously. But because of the magnitude of the irregular expenditure and the fruitless and wasteful expenditure that's been incurred, remember there's a legislative requirement to actually investigate each of those instances. So whilst there's been significant ramping up of the consequence management in terms of specific matters such as our previous material irregularities, there's still quite a bulk of instances that must still be investigated. But as this is happening, what has been said to us is that people are reluctant to participate in the awarding of contracts for the fear of what the consequences might be if they make mistakes. So that's why we said it would just be responsible of Prasa to just do it in a balanced manner, to not deter people from being part of key committees and then making those critical decisions that are required to move the entity forward, as mentioned. Chair, Honourable Chair, I think that Nompokomo did deal with the remaining questions. So I hope that covers us. Thank you.
Okay, thank you very much. Are there any other questions, colleagues? All right, I'm assuming everyone is
Chair?
okay. All right, Honourable Hatebe, proceed. Yeah.
No, thanks. Thanks for the response. I think we'll make a follow-up with Prasa. I find it very concerning and disturbing that there will be officials that will fear doing their work because they will make mistakes and be taken to DC. It, in essence, means that some of them, they don't know what needs to be done and what needs to be done correctly. Otherwise, that fear wouldn't arise. It's something that we need to take up. If the AG can assist us in this regard, is this widespread or is just an isolated incident where one or two officials are fearful of doing their work because they might make mistakes there and there? And lastly, when I ask about the maintenance, what I was trying to gather is that those trains that are stockpiled and are not being used, maintaining them while they're not generating income or doing what they were bought to do, isn't that indirectly constitute a fruitless and wasteful expenditure? I just wanted to get that understanding in terms of the financial benefits to Prasa, maintaining something that does not generate any income, value for money, for a lack of a better word. Thank you, Chair.
All right. Honorable Lisa, I thought you wanted to come in at some point. Are you fine?
Yeah, I'm fine.
Oh, okay. All right. No, that's
See,
fine. Let's get a response to Honorable Hatjaba's questions then, or follow-ups, and then wrap it up.
Thank you very much, Honourable Chair. I think just in terms of the culture of fear, this is obviously something that was reported to us by Prasa when we were discussing the lack of progress in terms of the procurement processes of contracts that need to be awarded. So the entity will also be able to shed some more light on the matter. But it did seem that there was some reluctance of officials to participate in contracts for fear of not wanting to inadvertently make an error and then be charged through a disciplinary process. But the entity will be able to shed some light on that matter. Then just with regards to the trains and the fruitless and wasteful expenditure, Honourable Chair, unfortunately, seeing as though these trains have been manufactured, the maintenance thereof is a critical component, but we do still maintain our concern that these trains are not being optimally utilised. We have noted that the recovery of the infrastructure is quite a comprehensive and multidisciplinary process that Prasa is working on. So it would then just be of critical importance for them to do that as fast as possible. That will enable the deployment of these. Thank you very much, Chair.
All right. Is that, colleagues, are you fine with that?
No, thanks, Chair. I'm covered. I'm covered on my side.
Thank you.
All right. Are there, AG, what's left? I've lost track.
I think we're done, Chair.
Are we not done? I think we're done, Chair.
Yeah. All right. That was one hell of a marathon. Obviously, SAA, there's been no audit, right?
Yes, that's correct, Chair. So for SAA, we do have audits that are outstanding for 4 years. We currently in the process of doing those audits, and we anticipate that those audits will then be finalized in the new year. So probably around February, March, we'll be able to finalize those outstanding audits and be able to provide feedback to the committee in that regard. Thank you, Chair.
Okay, anything else, colleagues?
Chair, are we still auditing SAA? And if we are, why this delay? I would have thought by now things would have been sorted, having gone through business rescue, getting new equity partners to run with SAA. Why are we still experiencing delays in finalizing these audits? I mean, it's an unacceptable, unheard of, and a worrisome concern. Are there any concrete reasons behind why are we still where we were 4 years ago?
Maybe if I can respond through you, Chair. Okay, no, that's fine. So I think Honorable Hadebe, what has happened in the SAA environment is due to their challenges regarding to their going concern and financial viability. SAA had not submitted financial statements for audit previously. So only after the business rescue process was undertaken was the set of financial statements then submitted to us. So the audits are only commencing now. So previously those financial statements had not been submitted and have only been submitted now. And that is hence we only starting with that audit process now and hopefully have it completed by February, March next year. So it was mainly due to those financial viability challenges, but seeing that that process of the BRP has been undertaken, we should be in a position to finalize them quite soon. Thank you.
All right, thank you very much.
No, thanks, Chair. Thanks, Chair. I get that and I understand. The business rescue process was concluded a while back, if I'm not mistaken. I was expecting that this process will be expedited, Chair. And if I can just get an exact date when AG is saying the financials were submitted now, what is now? Is it yesterday, last week, last month? What is now? Just to be specific. I always like paying attention to details so that my response or question is informed by the exact sequence of events. Thank you.
I think, Honorable Hadebe, let's be cognizant of the broader arcing issue, which is of something we must pose to SAA and the department, how the sale went through without audit. I think that will be far more critical, how they were able to finalize the transaction without having, concluded an audit process. So, but let's get that specificity from AG, if there is any. But I think the broader questions must go to SAA and DPE.
Thank you.
Honorable Chair.
Maybe let me allow Humulani to come in, and he can maybe give us the specifics on the exact date when the financial statements were submitted to us for audit. Maybe if I can hand over to you so that we can provide clarity on that aspect to the committee. Thank you.
No, thank you very much. Thank you for the question, Honorable Chair. The financial statements for the group, which is the holding company SAA, were submitted by 31 March this year. Sorry, 31 May this year. It was for the period covering the outstanding 4 years, starting 18, 19, 19, 20, 2021, and 2022. That is for the group. However, we could not start the audit at that point because the subsidiaries financial statements were not submitted. And as we know that the consolidation needs to incorporate the figures for all the subsidiaries, especially the major ones. We couldn't start the audit because those financial statements were not really auditable at that point. The AFS then for SAA Technical, their major subsidiary, and also AGSA were submitted in August. AGSA, it was mid-August, and then for Technical was early August. What then happened is that the financial statements for SAA Technical, which were submitted in August, when we started auditing them, we don't note that there were a lot of issues with them, weakness with the financial statements. We engaged with management, they then withdrew those financial statements, they then submitted another version, which was submitted last week. So those are some of the issues that we're experiencing with finalizing the audit of SAA. With regard to Mango, as we know that Mango is currently on business rescue. We had been waiting for the financial statement to be submitted. They are yet to be submitted. And the latest commitment is that they will submit them by Friday, this coming Friday. So those are the reasons why the audit couldn't be commenced on time and finalized on time. However, what we can tell the committee is that the audit has commenced in August. It is continuing. we are dealing with those delays and those multiple submissions as and when we go. And the current indication is that, as Madi has indicated, we are forecasting that we'll finish the audit by February, March next year. Thank you.
Okay, I think that suffices. Let's wait for Friday and then take it from there. I think that concludes that marathon from 9:30. Thank you very much, Team AG, for your very comprehensive and thorough presentations.
My thanks to them too, Mr. Chairman. Thank you.
Yeah, we are heavily and hugely indebted to all of you. Thank you very much. We are scheduling hearings for some of these entities, and we will be in touch with the dates in the coming days, so that you are appraised of that. Then we'll take it from there. So we will be in constant communication to take these matters forward. So colleagues, thank you very much. Next week, we're dealing with SAA and SSA, Tuesday and Wednesday respectively. So we'll communicate on all those things. So thanks to you colleagues and to our secretariat. After that long marathon, the meeting is adjourned and the House will sit at 1500 hours today for questions. Thanks colleagues, thanks Team AG. Sabo.
Thank you, Chair.
Long live the chair.
Members.
Long live the chair. Thank you. Thank you, AG.
Chair, please check your message on your WhatsApp, please, before you forget.
Will do, PK. Bye.
Thank you. Okay.
Bye.